allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
All right, kicking off the week before the election, 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, the next 10 days could be make or break for investors. There's a slew of big earnings, a Fed decision, the election, and more on the horizon.
And Volkswagen closing 3 factories in Germany, cutting worker pay by 10%, shrinking the rest of its operations as the automaker struggles to compete on costs with China.
Meanwhile, Boeing launching a nearly $19 billion share sale that would help the beleaguered plane maker boost its liquidity. All that and more coming up. But let's take a look at where markets are trading 30 minutes until those bells ring. You can see a lot of green on the screen behind me. Of course, we did have a down week last week, breaking several weeks of gains, but bouncing back a bit this morning. The S&P 500 up about 0.6%. It is a big week for tech. You have the NASDAQ 100 rallying ahead of that, up about 0.8%. And the bond market, the level is high, but right now the action is quiet, pretty much unchanged on your 10-year Treasury yield.
Have we mentioned that it's 1 week and 1 day until the U.S. presidential election? I've got here the Trump trade in red and I guess the Harris trade in blue. We've been watching this very closely. We all know that they've diverged with Trump, the Trump trade really taking over. But the question is, how much does this really have in terms of any bearing on what we really get as a result on November 5th, November 6th, or maybe later on in the week? It could take a while to decide who actually wins next week.
You see it in the bond market, you see it in the stock market, but again, like you said, a week to go. But until that moment, we see DJT shares just soaring this morning after that rally yesterday in New York City. It's up more than 8% today, and you have to remember the shares have already tripled in the 5 weeks since a lockup period for the biggest shareholders had expired, many considering the stock an election betting proxy. We're also watching shares of Boeing. It is actually down now almost 2% pre-market. It finally announced that long-awaited share sale valued at upwards of $19 billion, and it's to avoid that credit downgrade. We're also taking a look here at ExxonMobil. We see a drop in oil prices on concerns around the Middle East. Israel struck Iran military targets over the weekend, but they did not strike those oil facilities there, and you do see that risk premium hopping off the oil market, but you are seeing energy stocks down in conjunction, 2.6% lower pre-market, Matt.
All right, we'll be watching those oil stocks as well. Donald Trump held a 6-hour rally at Madison Square Garden yesterday, promising more tax cuts if you're helping taking care of your ailing parents. Also, I guess some of the openers trashing Puerto Rico.
Yes.
Which is not a great move usually in New York City.
He did use the word garbage, didn't he? So literally trash.
It was a comedian. So, you know,
right.
and it not, working directly for the Trump campaign, but doesn't seem like a smart look. Anyway, we have corporate news that really seems to eclipse that, believe it or not.
Yeah, we have
one story you've been watching pretty closely.
Boeing, I've been watching it closely. Of course, the news coming on Friday, they're considering selling off their space business. I've been watching that. That's according to people familiar. And then today, this is what we've been waiting for. Of course, they need to boost liquidity. We know that they, filed for that shelf registration for a share sale, and we got the news this morning. Interesting to see the stock reaction. Traders not quite sure what to do with it.
Yeah, it is. It interesting because on one hand it's dilution, right? On the other hand, it's money on the sidelines and they don't have that junk rating. Another thing to watch out for, I know we're going to be talking a lot about earnings. And Katie, you had this great point last week about companies outperforming more than usual when you look at the ones that have outperformed. But great analysis by Bloomberg Intelligence as well that the beats are coming at the lowest rate in nearly 2 years. I know we're going to talk a lot about those expectations.
It's still 75% of companies, of course, beating estimates, but still it speaks to the price for perfection nature of this market, that's not quite enough. But of course, given that it is a huge earnings week, you have almost half of the S&P 500 reporting over the next 10 days. Let's walk through the results so far with Bloomberg's Denitsa Seikova, and let's keep the conversation going. I mean, you had seen the market rewarding those companies that were beating expectations, but now you're seeing the degree to which that reward is lessening a little bit.
Yeah, at the beginning of the earnings season, it seems like beats were rewarded very well. Even the companies that missed weren't punished that badly. Obviously, what we're seeing now is a big reversal from that trend. But of course, this week is the busiest one. 42% of the companies are expected to report. All the big names expect no NVIDIA, of course. We have to wait another month. But we're seeing all the companies that work with NVIDIA. So we're definitely going to see a lot of reasons there. Also, we're expected to see tech earnings around 90%, which sounds great, 90% growth. But what we've seen in the past is in the ranks of 32%. So some analysts are worried that that Magnificent Seven and that tech that has been driving the rally maybe seeing a little bit of slowdown.
What about the S&P 493? I mean, we've been hearing so much about the broadening out, and there has been a rotation, at least the beginnings of one. Are they really proving their worth in terms of an earnings recovery?
We've seen broadly a lot of companies being rewarded for good earnings outside of the S&P 500, and we've seen really that rally has been broadening out for quite some time. Of course, when you look at the multiples at the Nasdaq 100, it's really a really big gap that's starting to close, but you can imagine that either, for example, small caps or mid caps have a lot of catching up to do, or it's really those big top 10 names are potentially up for some pain to really close that big gap between the winners and the losers. And this comes in a week with a lot of volatility. We saw the move jump at the highest, at the fastest pace since the pandemic.
The bond market volatility.
The bond market volatility. We saw stock market volatility around 20. So investors are worried.
Denitsa, we thank you so much. We have to see if that bond market volatility turns into that stock market volatility. We're going to discuss this all further with BMO Wealth Management Chief Investment Officer Young-Yu Ma. And we were talking a little earlier about 10 days, so many catalysts. You have the election, a Fed meeting, and also most of the companies here, about 42% of the S&P 500's market cap coming out with earnings in the next couple of days alone. What are the next set of catalysts, and are they upside or downside catalysts here?
Yeah, thank you. It's great to be here. There is a tremendous amount of things going on all at once here, and we think there are multiple catalysts here, of course, the election and earnings. If we look further out into 2025, though, I think it's also worth taking a step back and thinking what the broader market catalysts are. And of course, the Fed continuing to lower interest rates is going to be relevant for the market and continue to provide a positive backdrop. We think earnings are going to be healthy, and we actually think 2025 is going to be the story of business investment accelerating and also productivity continuing to come in strongly and provide companies the ability to increase profits and have operating leverage.
And let's zero in on earnings here, because you take a look at over the next 2 days, or 10 days rather, plenty to pick from, but we're talking about Microsoft, Alphabet, Amazon, Meta, all reporting over the next couple days here. You think about the narrative of last earnings season, second quarter earnings season, it was this frustration among investors that they're not seeing the payoff from that big spend that we're seeing on AI, billions and billions of dollars. What do you think the narrative around that spending will be this quarter?
That is a very big question, and that's something that is going to point to, I think, whether or not investors start to settle into the idea that the payoff from AI is just going to take not just multiple quarters, but multiple years. And there's a lot of spending that goes into it. I think all of these companies are committed to the spending, and that's going to come through strongly and benefit other tech companies, of course, semiconductor companies, but broadly, it's going to benefit infrastructure spending in a lot of areas of the economy. But whether or not investors react negatively when they see these big spending numbers come out, especially if these mega cap tech companies accelerate spending, not just keep up the current pace. I think that's an open question, because that does point to whether or not, broadly speaking, investors think that the gains from AI will be real over the coming couple of years. So that's what we're looking for, to see what that reaction is when these big spending numbers are announced.
All right, so generally good news, a positive outlook, Young-Yu, that we're going to have more corporate spending. They're going to be building up their AI abilities, these big companies, with billions and billions of dollars to support the U.S. economy. Is the Fed going to continue to cut rates, do you think? I mean, everything seems pretty rosy right now.
Things are looking rosy. We think the Fed's probably on autopilot for the next two meetings, for this upcoming November meeting and then the December meeting as well. Probably on autopilot with a 25 basis point cut at each of those meetings. But the big question mark does come into 2025, and we'll have to see what happens with the labor market, and we'll have to see what happens with the election and how fiscal policy and stimulus is coming together. I think probably the market is a bit more optimistic about the number of rate cuts that are possible in 2025 than will actually happen, at least under given outcomes that look at least to have high potential right now. So right now, we still have the Fed providing a positive backdrop, but that could moderate as we move through 2025.
So if there's so much uncertainty still out there, what would you characterize as the tone of your clients at this juncture? Are they more risk on or risk off? Are they waiting till we get past some of these catalysts to put real money to work?
A lot of clients are cautious, and we've been recommending not to be as cautious as that gut reaction or knee-jerk feeling might be about whether it's the elections, seeing how the earnings season plays out. We do think the overall backdrop is healthy. We think the overwhelming majority of election outcomes are at least neutral for the markets and not going to be damaging for the market. So we've been recommending continuing to put cash to work for investors that have cash on the sidelines. But there is that gut feeling of, why not just wait? Why not just stay out of the market? But as we've seen over the past several months, just staying out of the market itself can be costly.
And just quickly here, it's interesting you bring up cash. We've been having this conversation for weeks. When you're trying to coax your clients out of cash, I mean, how difficult is that at this juncture?
Well, it's a little bit easier now, given that the short-term interest rates are coming down. The Fed has not only started off with that 50 basis point cut, but is continuing to cut rates. Some of that is already getting priced in to what they can earn on cash. So the conversations are getting easier to coax investors into the market that do have cash on the sidelines, but the yields are still attractive when you can pick up 4+% just by sitting on it, and inflation is running at about 2.5%. Some people take comfort in that, but we do think next year still has a positive backdrop in the equity markets and is favorable for taking risk here.
All right, Young-Yu Ma from BMO Wealth Management, thanks very much for joining us. We're going to watch these markets today as futures look to signal a higher open right now. Just got about 18 minutes until the market opens. We're going to spend some time today talking about corporate stories that really matter to this market, matter to this economy. Boeing being first and foremost this morning after it launches a nearly $19 billion share sale to address liquidity needs amid a crippling strike. More on that next. This is Bloomberg.
This is Bloomberg News Now. News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
So a number of people, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Let's get to high interest now. A look at what's making headlines around the world. Oil tumbles after Israeli strikes against targets in Iran avoided OPEC crude facilities. Israeli jets struck military targets across Iran over the weekend, delivering a vow to retaliate for a missile barrage at the beginning of the month. The attack, though, was more restrained than expected and avoided oil as well as nuclear and civilian infrastructure targets. That's in line with requests from the U.S. government and offers the markets a little bit of relief. Indonesia is blocking Apple from selling its latest iPhone in the Southeast Asia's largest economy, saying the company has not met local investment requirements. The industry ministry said earlier this month that the tech giant has only invested $95 million in the country. That's below the company's initial commitment. It's a road bump for Apple, which has enjoyed healthy initial sales of its flagship products in other Asian markets like China, for example. And Boeing is launching a nearly $19 billion share sale meant to address its liquidity needs and stave off a potential credit rating downgrade to junk. The new CEO is grappling with a balance sheet strained by years of turmoil and the fallout from a strike that's now in its 7th week that is crippling manufacturing of the company's main cash cow, the 737 MAX jetliner. Boeing needs that cash infusion to maintain its investment-grade rating and fund its production ramp-up once the walkout ends, if, Shanali, it ever does.
Certainly still a lot of uncertainty, but one off the table with that share sale being announced. And for more on it, we are joined by Sid Phillip, Bloomberg's deputy editor for global aviation. And it's interesting, there was a lot of anticipation around the share sale. The market generally knew it was coming. We finally have the details. The stock reaction, at least initially, is lower. What are investors slightly disappointed by here?
At the moment, everyone's sort of looking to see what the uptake's going to be in terms of the share sale, and also what the future prospects for the company are. Because while they are sort of raising cash, the immediate prospects for Boeing are still pretty bleak. They aren't able to generate cash. They're expecting to burn through another $4 billion in the fourth quarter, and that will take their 2024 cash burn to about $14 billion. And they've guided that there will be further cash burn. So in the first half of next year, they're also talking about how they'll have to burn through cash. So for Boeing to actually start generating cash and actually start sort of sort of return on that investment is going to be a while. And I think that's what investors are slightly skeptical about, especially since the strike keeps going.
Especially too, and it's a great point on uptake, given that this is the largest share sale for any company since 2020. So a lot of question marks there about demand. I want to talk about some of the news from last week, though, that basically Boeing has started a review of its businesses. One of the businesses that they're weighing options for is the future of its space business. And when you think about what they should maybe spin out or sell here, it feels like the space business could be a no-brainer.
Yeah, at the moment, it's actually sort of, it's open season at Boeing because, I mean, they've got so many different issues that they need to grapple with that it's really difficult for them to sort of focus on other non-core businesses. I mean, Boeing's biggest sort of cash generator is their commercial aircraft business, and that should be sort of the focus for the company, and the CEO is sort of trying to focus on back to basics and sort of focusing on their commercial business. And so he has talked about how the company is looking at various options. They haven't really talked about space. I mean, space is famous for the 2 astronauts who were stranded in the International Space Station because of their Starliner essentially not being up to snuff. And so for Boeing, this is really a make or break moment. They have to sort of get a grip across different businesses, different divisions, and all the while they're burning cash.
Sid, what is the problem with a company like Boeing being seemingly completely unable to compete with a company like SpaceX? Is it just too much, I mean, too old, maybe too much bureaucracy? Is there anything Kelly Ortberg could possibly do about that, or is it better just to get out of this business completely if you have much more nimble competitors out there?
I mean, that's a billion-dollar question, and I think Kelly Ortberg will be the only one who can actually answer that question as to what he sees the future of the space business. I mean, Boeing's they've got multiple fires across different businesses, and at the moment, their core sort of focus is on sort of bringing back production. I mean, the strike's now in the 7th week, and the workers have rejected 2 offers from the company. And so at this point, the company is looking at ways that they can actually get production back on track. They can start generating cash with the 737 MAX, and then then they can focus on the other sort of parts of it. But at the moment, they've got multiple fires, and for Boeing, they really need to sort of get their heads around how they get the company out of the hole that they're in at the moment.
With this production shortfall, let's call it, and with the strikes, I feel like, Sid, you always have the numbers in your back pocket here. How much money is at stake for Boeing the longer this uncertainty goes on?
I mean, again, the spending, the company is expected to burn through $50 to $100 million a day as the strike goes on. And so it is really a big question as to when the strike ends, when they can actually get a deal with the workforce, and what that deal actually costs the company, because that is a sort of a really expensive proposition. The workers have asked for a return to a defined benefits pension that could cost the company a lot of money, and the company has so far rejected that. And so at the moment, it depends on how long the strike lasts. And remember, you can't actually start production immediately. It will be a gradual ramp up back to where they were before the strike. And the company was producing a lower rate as compared to last year when they had that whole blowout at the start of the year, and the FAA restricted them from raising production beyond 38 a month. So lots of fires, lots of issues. I mean, the quality issues, they've got workforce issues, they've got cash issues, and so Ortberg's got a big mandate to try and sort of get this company back on track.
Well, it's a gift that keeps on giving for the reporters covering it. Bloomberg's Sid Phillip, really appreciate your time. Of course, Boeing shares down about 40% year to date. You compare that to their closest competitor, Airbus. Airbus shares only up about 2%. A good reminder, of course, that even with all this pain that Boeing is going through, it's not immediate good news necessarily for Airbus. Of course, these contracts are signed so far in advance that it's not like Airbus can immediately swoop in here. But coming up, McDonald's bringing back the quarter pounder back to the menu without those slivered onions. Details next in Social Climbers. This is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets. All right, it's time now for Social Climbers. The company's making waves this morning. And first up, Amazon said to be in talks to lease space on Fifth Avenue as more workers return to the office. The tech giant recently told its employees it wants them back in the office 5 days a week, and this expansion would put Amazon staff next door to its Manhattan headquarters. Next up, we have Sunrun in discussions with data center developers to supply solar power generation for their facilities. Now, the potential collab here illustrates the race among developers and energy companies to find new power resources for AI demands. And finally, the beef is back. McDonald's says the Quarter Pounders will return to menus at all restaurants this week after ruling out beef patties as the source of a multi-state E. coli outbreak that sickened dozens and left one person dead. The infections appear to stem from the slivered onions served on top of the burger, and these burgers will not have any onions. You can follow all the latest company buzz on TRE and Go on your Bloomberg terminal. Meanwhile, let's take a check on futures here. Of course, just a couple minutes until the bells ring. You can see green on the screen after that down week that we saw last week. The S&P 500 up about 0.5%. Big tech leading the market slightly when it comes, of course, to the benchmarks, up about 0.6% on the NASDAQ 100. Small caps, great day so far. Hasn't even started, but the Russell 2000 up about 0.9%. This is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because, we focused a lot on automation and upgrading our quality standards. so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, you know, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that, not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
We are just moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Futures are really ripping, actually. S&P futures up 0.6%. NASDAQ futures up about the same. So it's not just the big tech drivers on the benchmark index. Russell 2000 futures up 0.8%. You hear the opening bell down on the New York Stock Exchange, as well as the NASDAQ market site. Covenant ringing at the New York Stock Exchange. Down at the NASDAQ market site, we have the American Bankers Association. It does look like, Katie Greifeld, that we're going to get a bit of a lift today. I'm not sure if we'll get another record high on the S&P 500, but it's interesting that even ahead of the election, we're getting close to that again. Nothing can stop this bull market.
It certainly seems that's the case, Matt Miller. You take a look, of course, where we're trading just a couple seconds into the U.S. day. As you said, I mean, it's pretty much dead even between the S&P 500 and the NASDAQ 100. Different than what we saw pre-market, those two indexes leveling out ahead of a very hefty week for tech earnings. We know that, but at least your early leader on this trading week, on this Monday, are those small caps, the Russell 2000 of about 0.8%. We'll see if these gains hold. Of course, the S&P 500 snapped a 6-week winning streak last week. We'll see what this week holds, rather. Let's take a look under the surface. Trump Media and Technology shares, DJT is the ticker there, extending gains on the heels of yesterday's rally at Madison Square Garden, where Trump supporters, including Hulk Hogan and Elon Musk, campaigned. Shares have more than tripled in the past 5 weeks. We know that this stock has kind of turned into a proxy on Trump's odds, and at least right now, Sonali, shares currently higher by about 7.4%.
Katie, I also have an election-related stock. It is not what you think. I am watching shares of Robinhood. They're higher on the news that they will let users bet on certain events, particularly the presidential election. You have Robinhood now up 2.3% as the market opens. We're going to bring you more on that later this hour.
All right, finally, let's check in on shares of Alphabet ahead of earnings tomorrow. It's a huge week for earnings for the Magnificent Seven, with Alphabet, Microsoft, Meta, Amazon, and Apple reporting, even though NVIDIA doesn't come out for a month. As Katie has been pointing out this morning, a lot of its customers are reporting this week, and we'll get some CapEx expectations from them. Let's discuss the expectations. Mandeep Singh of Bloomberg Intelligence. Mandeep, we had a guest at the top who said, look, it's all about business spending, and these are the companies that are doing the bulk of it. Do you expect good outlooks in terms of CapEx?
I mean, the more CapEx is something that used to put pressure on the stocks. Right now, everyone is treating them positively because these companies are at the forefront of building these large language models, which underpin the entire, Gen AI wave. And look, I think they've been able to show some of the ROI. So in the case of Microsoft, They have quantified the Gen AI lift. It's 7 percentage points to their Azure growth. If they come out and say it's 10 percentage points now, I think that those are the data points you need to validate that Gen AI is contributing. And
by the way, Young Yama from BMO, who was talking to us at the top, pointed out the dissimilarities between 1999 and now, in that the companies back then had no money, right? And they were posting losses. These companies have hundreds of billions of dollars in free cash.
There is, I mean, the balance sheets look really healthy, but the question is, how much are they going to spend in the next year and next 2-3 years? Because the scaling laws, when it comes to these large language models, they continue to hold. So the next training run for a GPT or a Google Llama is going to cost even 2 to 3 times more than what it did for their prior models. So from that perspective, the investments continue to ramp up. And it'll be interesting to see if all of them maintain their CapEx guide in terms of raises, or one of them says, I don't want to spend right now. And Apple has been the wild card when it comes to the CapEx. They have not increased their CapEx at all. And still they're talking about deploying AI.
You know, you kind of hinted at this, that it's not just the amount they spend, it's the return on the investment of that spending. And the biggest run-up in stocks that you've seen out of this group was actually Meta. And are people happy with what they're getting back in return?
I think compared to what they were getting with Reality Labs spend, with AI, clearly I think the narrative has changed completely. And I wouldn't be surprised if Meta comes out and says they're raising their CapEx guide. But at the same time, they've shown how their CapEx investments have helped on the Reels front, on the content recommendation front. So investors are okay. Even if Reality Labs continue to lose $18 billion, which I think if they were to curtail back, that would be positive for the stock, but clearly the AI front is working very well for them.
So 2 points here. It's interesting to me that we're having a CapEx discussion and we haven't brought up the function SPLC. You can see, of course, who NVIDIA's customers are in that group that we mentioned, about 40% of NVIDIA sales in the second quarter. But I want to keep talking about Meta here because Peter Bukvar, he had a really interesting note this morning talking about that scrutiny on the AI spend. He said that Meta's core business is so solid that it's probably less under the microscope than Alphabet, Microsoft, Amazon. Do you agree with that? Talk to us a little bit about the core business of Meta relative to that AI spend.
I mean, look, the last 4 quarters, the comps were very easy. So they were able to put those 20% plus growth numbers. The comps do get tougher in the second half and for next year. So from that perspective, ads is still a much more cyclical business. When it comes to all the other big tech names, they're so well diversified. To me, Meta is still indexed entirely to ads. And that's where, there will be a cyclical element. The Ray-Ban glasses are catching up, so at least they have something to show.
You're familiar with them?
I am. And look, I think that's a good form factor. So if you're talking about deploying AI as a virtual agent, the glasses are a very good form factor. So at least they have had some success on the hardware side, but it's still an ads-focused company. There's no doubt about it.
All right, a good place to leave it. Mandeep Singh, appreciate your time. That is Mandeep from Bloomberg Intelligence.
Katie, I tried to get
Tell me.
a pair of those Ray-Ban Metas. Last week, I thought I had seen Mandeep's, and I want to make videos of, first person driving in my car.
Yeah, put them on YouTube,
for my
on
podcast.
TikTok.
Because I have a podcast.
You do, Hot Pursuit.
It's called Hot Pursuit. I highly recommend you check it out. In any case, $800 is what Ray-Ban wanted for those. When you factor in my progressive lenses.
You don't have insurance that covers any of that?
I don't think
it
covers all of it.
discretionary?
$800 is too much, I think.
That point you were making, though, also on NVIDIA being a big part of this story. I was pulled up that SPLC function that you were talking about, Microsoft being the top of that list, Meta being number 2. And so if we're in this storyline where Meta is going to be rewarded, as Mandeep says, for bringing more spending to the table, it's a great week to keep watching NVIDIA, isn't it?
Yeah, the stakes are definitely high, of course, for all of these companies, even the ones that aren't reporting, the NVIDIAs of the world, of course. A quick check on the stock market. We are 7 minutes into this trading day. You can see green on the screen. You have small caps just making a run for it, up about 1%, up about 0.5% when you take a look at those large cap indexes. A quick check on the cross-asset landscape here. You have 10-year yields relatively contained right now. I'm going to go ahead and call that flat. We know it's been a volatile time in the bond market, the absolute level quite high. You take a look at crude, a little bit more volatility there, down 6% after Israel attacked Iran with a strike, but of course limited those to avoid the infrastructure when it comes, of course, to the oil facilities. And then you take a look at the VIX, currently trading at 19. All of that a setup to talk to Vandrian Capital President and CEO Shana Sissel, sitting to my left. It's great to see you in person.
Absolutely, great to see you in person.
So you join ahead of a consequential 10 days. We've been talking about it. You have earnings, you have the election, you have the jobs report, you have the Fed in there as well. When you think about the hair trigger that this market seems to be on, what are you paying the most attention to?
The election.
Yeah.
By far and away, the election. All the other things are normal business cycle, things that occur, economic data that we normally get, but the election is the most consequential because there are several surveys out there that have shown that businesses are holding off on making any decisions till they have some idea of what candidate is going to win, because it really will affect the rules of the game, if you will.
Speaking of that, we had a survey from MLive today that says that investors are largely thinking that a Donald Trump victory would be better for stocks. You know, some of that calculus is down to the corporate tax rate, but at the end of the day, you know, they do believe that stocks would go up either way. And so how do you parse that trade out, especially when you know that the market has been employing that Trump trade so heavily in the week up to election?
Well, it's interesting because the polls show a virtual tie at this point. So where it goes is anybody's guess. But I will say this. We spend a lot of time thinking that certain candidates and certain outcomes will be better for the stock market than others. But historically, it doesn't make that much of a difference, to be honest. Just having that certainty is the thing that sends stocks higher. It's less important who wins. Now, if you look back when Trump won in 2016, that did send the stock market higher, but that was a different environment than we are in today, where we've just seen the strength in the stock market all along.
We're already up 22, 23%.
2 years in a row.
Yeah, exactly. Double 20% gains is pretty crazy, and I guess it's because we do have a lot more certainty than we like to talk about, right? We know no matter who wins the election, they're not going to cut spending. It's going to grow. The debt and deficits will rise. We have this new magic money tree, and that's all the market cares about, right?
Yeah, I'd like to tell my son that, right? Like, what do you think? There's a magic money tree in the backyard, and I can just pull off whatever you want, something. You know, the government is essentially doing the same thing. I completely agree with you.
Are the bond vigilantes going to stand up to this at some point? I mean, this is what I wonder after the election, especially if you get a red sweep, right? Mm-hmm. Trump winning and Republicans taking the House. Does the bond market say, hang on a second here, we're going to raise rates on you a little bit?
They kind of have to. If you look at, I believe I was looking at a strategist piece the other day, and it showed that the cost of debt right now is about 3.6%, which is lower than any place on the yield curve right now. So they kind of have to come up to kind of meet where the curve is. So rates do have to come up, and that can be of concern. My bigger question is, what's the Fed going to do? Because there's more strength in this economy than I think we'd like to give it credit for. And that puts the Fed in a difficult position. The job report from last month was unusually strong in the way that the Fed probably wasn't expecting. And I'm not convinced that inflation is completely under control just yet. I think the Fed has to be careful what they do at this point.
Interesting. So it sounds like you think that we're not getting another 50 basis point rate cut or anything to that magnitude. With that backdrop, I mean, how do you position in this market? You think about how you build a portfolio around these different cross currents, and there's so many of them. What's your conviction right now?
So I just want to say, when they cut 50 basis points, I thought that was an overreaction. Mm-hmm. I never saw it coming. I will be the first one to admit, you can watch me, you can see all of my clips. I never predicted that.
You have the receipts.
I have the receipts. I was wrong. That surprised me. Now, that said, in this kind of environment where stocks and bonds are behaving kind of in unison, I am a big fan of using alts. And Queen of alts, here with you today, telling you I use alts. Big surprise. But I do think in this environment, having that diversification benefit really matters. So that's really where I'm spending the time. And I'm taking it more out of fixed income than I am out of equities. I think there's more upside opportunity in equities than in fixed income. I think fixed income has more questions. So that's where I'm kind of taking from in my portfolio to put into more alternative strategies.
Shana, great having you on the program. Great having you on set. Thanks so much for joining us here in person. Von Rhein Capital President and CEO Shana Sistel. Coming up, Volkswagen unveils plans to cut its expenses by shutting down factories and dropping wages. We're going to get Ford earnings later today as well. So talk about the cars next. This is Bloomberg.
In tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Volkswagen announced plans to cut expenses in an effort to become more competitive with China. The automaker plans to close at least 3 factories at its home in Germany, which is a huge deal, and cut all its workers' wages in its home country by 10%. That plan could lead to tens of thousands of job cuts in Europe's largest economy. Another car company looking to cut costs is Ford, right here in America. They are set to report third quarter earnings after the bell. And here with the preview of that is Bloomberg's Keith Naughton in Detroit. Keith, it is fascinating to watch the damage done to German automakers and the German economy by Chinese competition. Is it as bad here in the U.S.? Because you don't hear as much about German cars at U.S. auto show, Chinese cars, I should say, at U.S. auto shows.
Yeah, no, the Chinese threat in the United States remains just a threat. They're not here. You know, President Biden is putting 100% tariffs on Chinese EVs trying to come here. So we really don't have, you know, Chinese players here in the United States yet of any note. In Europe, that's not the case. And the European automakers like VW, like Mercedes and BMW, it's a double threat for them because they have such large operations in China that are really under pressure because of the growing competitiveness of the Chinese car makers. And then, of course, the Chinese car makers are going into Europe. So they have a sort of a two-front war going.
Let's talk about Ford a little bit more specifically. Of course, they report earnings after the bell. Matt, I know you are really dialed into what's going to happen there. You take a look at how Ford has fared in the stock market. That big plunge at the end of July, of course, that's when they last reported earnings. Of course, those warranty costs really eroding profit. That led to the biggest drop in 15 years. And it's interesting that Ford shares really haven't recovered from that. We've kind of flatlined since. What are you expecting to hear after the bell today?
Yeah, well, I mean, there's going to be a keen focus on cost cutting. In addition to the warranty costs, which spiked by $800 million in the second quarter, and which Ford spent over $4 billion on last year fixing their customers' cars. There's also a promise that they're going to cut just $2 billion in costs in general that was supposed to be backloaded to the second half of the year. So investors are really going to look to see that they've taken out the knives and cut these costs as promised.
How can Ford, you know, from quarter to quarter, reduce warranty costs when those vehicles have already been designed, produced, sold for the most part? They're just coming back to the dealer to get fixes from mistakes made in the factory.
Right. There's sort of near-term and far-term things they can do, Matt. In the near term, what Farley is doing is he is holding new cars as they come out of the factory to give them extra quality checks. In the first half of the year, the F-150 had a refreshed new model, and there were cars all over Detroit here in holding lots as they went in and checked them, gave them extra checks for quality. Farley says that saved 12 recalls. They are the most recalled automaker in America. But then long term, what they have to do is really fix the way they engineer and design the cars so you don't have these mistakes happening in the factory.
Brutal statistic to be a part of. Bloomberg's Keith Naughton in Detroit. Of course, we will be eagerly awaiting those results after the bell. And coming up, we're going to talk about Robinhood rolling out betting contracts for events like next week's election. That's next in our Wall Street Beat. Robinhood shares on the rise. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
And it's time now for the Wall Street Beat. Robinhood will let retail traders bet on the outcome of next week's presidential election. That's as it diversifies from traditional markets. The event contracts will be limited, and buyers will have to attest that they meet a variety of requirements, according to the company. Bloomberg's Catherine Doherty joins us now, and it's interesting to see them do this right before the election. Of course, there's been a lot of regulatory concerns about this world up until this point. They're also pairing up in sorts with Interactive Brokers. They're utilizing IBKR's backend for trade routing. These used to be historic competitors. Why is this an opportunity for Robinhood at this juncture, and does it give them a serious opportunity with such a short time horizon into the election?
So I don't think they're worried about the short time horizon. They are really trying to take advantage of the activity that other platforms, some of their competitors, have already seen and displayed that this is something that they can get into. But really the big question mark the outcome of the election and what possible ramifications it might have on the election itself and the integrity of the election. Now, when the court had reversed the stay that basically was preventing these types of betting to occur, that opened the floodgates. So that's why we're seeing Robinhood today make this announcement. Interactive Brokers was really the first registered big platform that started this wave. And it could be that even between now and next week, we see others that follow. So it's just who's going to be ready in the next few days. And it could be that there's still more things to bet on even after next week's election.
Right.
If things aren't resolved or there's still question marks of do you think yes or no, and you can make bets expressing your view,
Right.
there's probably even more trading that can occur.
That's a great point because, I mean, my first reaction reading this was, okay, this will be fun and useful for about 8 days, but of course we might not get a result by then. But talk to us a little bit more about the regulation and how it might impact the timeline here, because I don't know, I imagine that Robinhood would have liked to have this out a month ago, but do we have a sense of whether the regulatory overhang was a delay for this company?
It does seem that way just based on the timing. If they're launching a week out ahead of the election, they had everything really ready to go. Now, the regulators are having to then be what they say is the market cop, the election cop, as they say it. And that's not because they want to necessarily have to maintain the oversight over the activity, but they're forced to because of the court's decision. So this is their Robinhood, Interactive Brokers. These are platforms that the CFTC is having to work with and regulate, and so this is no different.
One other way to look at this that I think is interesting, these are being treated as markets, like a stock and bond market would, not like a sports betting contract, which are regulated state by state. And so I think that's going to play out over the next couple of years. Clearly, the CFTC wants more control.
It's pretty crazy, though, that they use Interactive Brokers tech.
Right, this
right?
is
Because
a historic rivalry.
they're still competitors.
Totally.
I mean, don't they feel kind of weak using
I don't think
the other
so.
guys?
I think that if you think about the market as a whole, they probably see this as the more activity and the more that this can become a regular mainstream type of trading, and the more that all of their customers can get used to this, it's a benefit to all parties. So
but why not just use Interactive Brokers?
I think that if you can make the act of trading and betting on the outcome of elections, they just want it to be a very common activity, and that just will feed. And potentially, if you add even more of their
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
DOJ or other authorities
could face bigger challenges with those elections.
Was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast. That's where you will find us. Alex Steele out today. Bailey Lipshaw sitting in for Alex, and I'm Paul Sweeney. Looking at this market, so we have green on the screen here. Let's go right to John Tucker and get a Bloomberg Business Flash. John, what are you looking at?
All right, Bailey and Paul. This report being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. 10 of the 11 major industry groups in the S&P 500, they are higher right now. Real estate, best performer. Energy, the only area that's falling is oil prices. They continue to plunge. This, of course, the busiest week for earnings. You have Microsoft, Alphabet, Amazon.com, Meta Platforms all announcing earnings this week. Brooke May over at Evans May Wealth says stocks at this point for her looking a little too expensive.
Right now, with the 10-year Treasury up about 65 basis points from the first rate cut, we think it's not a bad idea to rotate into some fixed income. If we can get 4.5% or 5% on a high-quality corporate bond, why not? We think that's a good place to be right now with stretched equity prices.
Among the most actively traded, you have shares of Boeing right now. They were down about 0.9%, launching a nearly $19 billion share sale to address the liquidity needs. McDonald's says quarter pounders will return to menus at all restaurants this week after ruling out the beef patties as a source of the multi-state E. coli outbreak. And Volkswagen planning to close at least 3 factories in Germany, Europe's biggest automaker, trying to slash expenses there. VW's plans may threaten tens of thousands of jobs. That's a jaw-dropper. And we check the markets for you all day long right here on Bloomberg Radio. The Dow, 247 points higher. The S&P 500 up 25. The NASDAQ 100 right now 74 points higher. And we have the 2-year yield up 1 basis point, 4.11. The 10-year yield right now 1 basis point higher. And that is at 4.25. Bailey and Paul.
All right, John Tucker, thank you so much. We appreciate that. Bailey Lipshaw sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Bailey, what are you looking at this morning? It's big earnings week coming up here.
Big earnings week. As you know, I sit on the ECM desk, so focused a lot on that Boeing story. Wow. That launch is huge. Yeah, as JT mentioned.
Are they going to? What's the timing of that? Are they going to do it today, over a number of days? What are they?
It's unclear. When I talk to some of the bankers, they've actually been ignoring my phone calls this morning because they're actively working on the deal, and we've been reporting. Over 15 billion was what they penciled in. Right now, rough math is closer to 19 billion. But when you look at 90 million common shares plus a $5 billion mandatory convert, that's a lot of activity, and a lot of these banks are working on this. So working the phones, lining up buyers.
How long is that going to last?
The cash?
Yeah.
It should. The comments that I got from talking to bankers last week was they want this to be a one and done. So the vision, I think, is if you can raise, call it $19 billion. We've seen analysts penciling 18 to 21. That at least bridges you from A, avoiding the downgrade to junk, and B, helping the company kind of right the ship and get back to actually cash flow positive.
So they'll get through the first of the year. Well past that, I guess.
Well past. Right now, I think they're supposed to, they penciled in losing, I think, another $4 billion in the fourth quarter. They have $10 billion in cash, $10 billion in another kind of debt instrument they launched and priced, I believe, a week or two ago. So they have flexibility, but trying to avoid getting downgraded to junk just because of the read across to the stock and bond
And I think they're talking about being free cash flow by the second half of next year. So that'll maybe bridge the gap here. Let's check in with what's happening under the hood with these markets. Natalia Kiniejevich, she's equities reporter for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Natalia, what are you looking at today in the equity markets? Again, noticeably higher this morning.
Yeah, so let's start with Volkswagen. We see that there was news today that the company plans to close at least 3 factories in Germany. Proposals also include a 10% wage cut. And this is overall just one next step for the company because it's dealing with lots of challenges. It's losing its market share in China. When it comes to EVs, of course, there are also many questions. Costs are high. Demand is not as great as they want it to be in Europe as well. And the company is, yes, trying to manage those costs. And another thing that we should keep in mind is that those measures will likely intensify those negotiations with workers, of course. So that's going to be maybe the next thing to watch.
If only Matt Miller were here, Paul, because
he could give you the whole
company, car maker.
I mean, his stock's down 1% today, down 20% year to date. So, like a lot of the auto companies who are trying to deal with a changing Chinese market and the transition to EVs.
Exactly, but also keep in mind, guys, that luxury segment is still relatively strong, right? Even across Volkswagen Group, they said that Porsche is still one of the biggest sources of profit for the company. So we will see again if it continues.
Gotcha. All right, how about our good friends in Boeing?
Yeah, so you mainly covered the main story earlier. So yes, it launched nearly 19 billion share sale and offered to sell about 90 million common shares. And the biggest question is, of course, we know that the company is struggling. It needs to keep its investment grade credit rating, and it's still negotiating with unions, and we know that they rejected that proposal. So probably this step would be helpful for the company in terms of like this first the most urgent step to keep this rating and avoid possibly higher cost of debt. So this is also one of the things that we are keeping an eye on.
Also looking at hedge fund positioning.
Yeah, so you know that this is my favorite
This
story.
is your favorite story.
So we saw a pretty interesting move last week. We saw that hedge funds sold U.S. stocks, specifically macro products. These are your indexes and ETFs. When they do this, this is a very clear signal that they are hedging. They're maybe ahead of elections, maybe they're not certain about those earnings. There was a lot of short selling, specifically across large cap ETFs, small caps, as well as energy ETFs. But they bought slightly U.S. single stocks. This happens when they are certain about earnings or specific single stock story. And one sector that really stands out to me is healthcare. They bought it on a monthly basis by the most across all U.S. sectors. Earnings are good. If we look at Bloomberg intelligence data, we see that the second biggest positive earnings surprise was in healthcare. And you might guess who was the first, which sector was the first in terms of the biggest positive surprise? Utilities.
Utilities, all right, there you go. That's the AI play. All right, very good. Natalia, thank you so much for joining us. Natalia Kenyajevic, equities reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. We appreciate that. Let's switch gears and touch base on the ever-changing situation in the Middle East. Kirsten Fultonrose joins us, president of Red 6 Solutions. Kirsten, I guess the most recent data point that everyone's trying to digest here is the Israeli response in its attack on Iran. How would you characterize Israel's response, sending approximately 100 fighter jets to attack some key logistical targets? What do you make of that move?
It's interesting. 100 fighter jets sounds like a lot. They were sent in 3 waves, but this response was actually designed to allow Iran to declare it requires no response. Israel only hit military sites. They hit outside densely populated areas. They had at most 1 civilian casualty. The Israeli Defense Forces say that they targeted border radar systems with very light warheads. Direct quote, to remove Iran's early warning capability, and then they followed with the jets that struck carefully selected sites. If we look at those sites, according to some experienced U.S. analysts who were looking at unclassified imagery, Israel struck buildings in a couple of places, including in Parchen and in Khojer. And there are 2 reasons why these locations matter. 1, Israel hit Khojer, which is a large missile production site that's near Tehran, but not in it. The reports back in July that Khojer was being expanded. So according to these analysts looking at the imagery, Israel's pinpointed strikes could have significantly reduced Iran's capacity to produce missiles, which then make it less apt to want to continue this fight with Israel right now. Second, Parchen is a large military complex near Tehran as well. So capital pays attention, but it's not actually feeling the hit. The satellite imagery analysts tell us that Israel hit a building there that was used for testing in an old nuclear weapons program that was called the Ahmad Plan. This program was shut down about 20 years ago. according to international watchdogs. But Iran denied it ever worked on a nuclear weapon there. So this target, we think, was a message to Tehran. We hit an old facility without personnel, without nuclear material present this time. But we can reach your nuclear facilities without you being able to prevent it in the future if we think it's necessary.
And Kirsten, you have more than 2 decades of experience working in national security with a focus in the Middle East and Africa. One of the things that stood out to me was that Israel distributed videos of Prime Minister Benjamin Netanyahu and military chiefs coordinating the defense from a ministry bunker, which was a rare acknowledgement of an attack on Islamic Republic and an expansion, what had been mostly a shadow war. What do you make of the video being distributed, and how does that potentially impact kind of the path forward?
I think the reason for distributing the video was to make it clear to the international community that Israel is in a real war, that it is truly the existential threat it feels. It wants the international community to have a sense of as well. While we're planning our response on Iran, we are still taking hits from Hezbollah and from Hamas, and perhaps from the Houthis. So they're trying to let the international community know that this is not something they're taking lightly, that they aren't being arrogant, that they really see the threat as serious. So that means U.S. support needs to stay high. That means Europe needs to stay behind them. They're trying to make sure that they continue to maintain this level of support and this level of attention on the threat from their international partners while they stage these responses, sometimes without listening closely to their international partners.
Kirsten, what do you think the end game is now for Israel, and maybe the timing associated with that?
For Israel, the end game is not what the international community would like to hear. The arguments for a ceasefire are ongoing from almost every corner except from inside Israel, and often from except from inside parts of Hamas and parts of Hezbollah. For instance, you see that Hezbollah right now is saying it will not negotiate unless it's not under attack. And their own Speaker of the Parliament in Lebanon is negotiating for them. So Israel's saying, look, we don't have space to talk about a ceasefire unless it's short. We get some of our hostages back so that we can reduce the domestic pressure on us to bring hostages home. But this conflict is not over. As long as there is still a threat, as long as all of these groups continue to say one of their primary objectives is to eliminate our state from the map, this threat will continue to face us. We will continue to fight this kind of onslaught every few years, like we have for decades now, unless we do something decisive. So they're looking to uproot Hamas, uproot Hezbollah, shut down the Houthis' ability or will to fight this war on behalf of Hamas, and to put Iran on the back foot where it no longer has the capacity to strike and perhaps no longer the will. It certainly does not have the domestic support, but the hardliners in Iran's leadership are going to push that fight going forward as well. This is not over.
Yep. All right. That's kind of what we're hearing across the board. Kirsten, thank you so much for joining us. Kirsten Fontenrose, she is the president of Red 6 Solutions, joining us from Washington, D.C. via Zoom, kind of getting the latest there. But again, it seems like this is Israel saying, you know, we're going to settle everything here. That's kind of our goal, as opposed to maybe when we started out a year ago, which is, you know, neutralize Hamas and get our hostages back. This obviously is much broader, much wider.
Exactly, and to just briefly draw it back to markets, we are seeing crude and Brent oil under pressure. Yep. Crude right now down more than 5%.
Yep, exactly right. All right, coming up, we're going to check in with Shanna Sissel. She's the president and CEO of Van Ryn Capital Management. Get her thoughts on these markets here. Again, green on the screen. The S&P up 0.5%. The Nasdaq's up 0.6%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. With this Bloomberg Business Flash, stocks pushing higher. Most of the industry groups in the S&P 500 are up right now. The one that's down is energy as oil plunges. You have NYMEX crude, quote American crude, down about 5.5%, under 70, 67.82 a barrel. The reason behind that, the Israeli strikes against Iran were considered to be somewhat limited. Investors waiting for results from firms accounting for nearly 42% of the S&P 500's market cap. Reporting earnings this week, several members of the Mag 7 group, Apple, Microsoft, and Meta Platforms. Boeing shares right now among the most actively traded, down 1.9% after launching a nearly $19 billion share sale. One of the largest ever, in fact, by a public company. They're addressing liquidity needs as the machinist strike drags on. And then Volkswagen planning to close at least 3 factories in Germany, Europe's biggest automaker, trying to slash expenses. Finally, this story on the Bloomberg. Olympus pushing out its chief executive officer after investigating an allegation he purchased illegal drugs. Stefan Kaufman was actually one of the few foreigners running a blue-chip Japanese company. S&P 500 right now up just about 30 points, up 0.5%, 58.37 on the index. The Dow Jones Industrial Average up 294 points. That's up 0.7%. Now the Nasdaq 193 points higher. That is up 0.5%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Bailey.
All right, JT, thank you so much. We appreciate that. Bailey Lipschultz sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on the intraweb thing, YouTube, so you can go search us out there. And what would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcast. All right, our next guest, let me see if I got this conjugated right. She's in Chicago, but she's a Boston native and fan of the Red Sox, which means she's rooting for the Dodgers. I think I've got that right. Shana Sissel, President and CEO of Banrion Capital Management, joins us here in our Bloomberg Interactive Broker Studio. Did I get that right?
You totally got that right. I think, as we were saying before, Dave Roberts has to continue to do everything he can to help the Red Sox, whether it be win a World Series as a player, give the Red Sox a World Series as a manager, and now he needs to make sure that the Yankees
prevent the Yankees. I get the whole concept there. All right, before we get to your market call, which we want to talk about, Pink ETF. Talk to me about that.
Yes, so Pink ETF is near and dear to my heart. I am a breast cancer survivor, and October is Breast Cancer Awareness Month. The Pink ETF is issued by Simplify Asset Management. It is a healthcare ETF. It invests in healthcare. It is not specific to cancer or breast cancer in general. It's the only pro bono ETF on the market, meaning that the manager does it pro bono, and they donate all of the net profits of the fund through its expense ratio to the Susan G. Komen Foundation for Breast Cancer Research. So, it's October.
Yep.
Breast Cancer Awareness Month. Right. You can do your part, and this is a interesting way to do that. The fund has a great track record.
Yeah, absolutely. All right, so Karen from Spring Lake, that's for you. Talk to us about the markets. What do we do here? Do we just sit on the sidelines until the election's over and then become investors again? What are you telling your clients about these markets these days?
Well, the election is the #1 most important piece of news that the markets is waiting for. We have a virtual tie in almost all the polls, and I have opinions on where I think that kind of leans. But in that kind of environment, companies are reluctant to make any big CapEx decisions. They're kind of putting a pause on policy, waiting to see, who wins, because the rules could be substantially different depending on who becomes the victor.
Well, what do you make, Shana, of the betting market? We talk kind of ad nauseum, it feels like, at Polymarket and Predicted and how that impacts it, what the Trump trade is or isn't. If we're still in agreement that it's a coin flip, how are people positioning if we are kind of at least reading about and Bloomberg's reporting about kind of the so-called Trump trade if it still feels kind of like a deadlock?
Well, I think there's this one little caveat, nuance to this, which is that I think in polls that are showing a deadlocked electorate, that is actually pro-Trump, in my opinion, right? I think we've seen this in every election he's been involved in. The polls tend to underestimate his his voters, because being associated as a Trump voter has some negative connotation in the broad public, right? So people are less likely to be honest about it until they get into the, the voting booth, and then it doesn't matter because it's truly anonymous, or we hope so. In that case, I think that when you see something where it's a virtual tie, it's probably leaning more in Trump's direction than it is in Harris's direction. That's just my opinion.
All right, so elections aside, it seems like we've got a Fed that's accommodative. Seems like earnings generally remain fairly strong. The economy remains fairly strong. Inflation coming down. How constructive is that for you guys in terms of taking risk in this market in place?
Well, I think this is a market where you can take risk. So for me, the way I position portfolios is I want to make sure I can get the most upside I can from the equity markets, because I think that the probability of upside in the equity markets is quite high. And I think it's also high probability of risk assets outperforming. So I want to be able to take that risk. I'm not as certain about fixed income markets. So I'm taking some of my fixed income allocation and putting it into more alternative strategies, which I think do better than fixed income, but allow me to take more risk in equities because they are diversifiers that tend to reduce overall portfolio risk. So that's kind of how I'm positioning myself right now.
Within taking on risk, when you say that, do you mean within large caps? Or are you skewing out more towards like a small cap? I just am looking at in terms of earnings. We're going to hear from this week alone, Alphabet, AMD, Microsoft, Meta, Apple, Amazon, and that's really CapEx comments have been making up so much of the NVIDIA trade. So when you're looking at allocating risk to equities, what does that look like?
So I do think it involves some of the high flyer growth stocks. We haven't had an environment that's conducive to small caps or value in a while. Jason Trennert from Strategas did a great piece last week called 10 Things I Think. And one of the things he talked about is since 2009, we've been in this perpetual QE cycle where companies haven't been, permitted to fail. And so we've been in this perpetual late cycle, business cycle. The business cycle's kind of disappeared. And in doing that, it's been a complete headwind to anything that would benefit from things winning and losing. And not allowing companies to fail has kind of also increased the haves and have-nots. So I'm willing to take more risk in those larger cap names. That's where I actually think there is more risk, but also things like Bitcoin, which is not a stock, obviously, but is a risk asset, in my opinion. I would argue small caps could be considered a risk asset, but value wouldn't be, right? So you're probably staying away from some of your cyclicals, and you're going with your more risk growth beta names is where I would be paying attention right now.
Shane, I know you have a lot of experience in alternatives, and I've been surprised when I talk to retail advisors how willing they are to embrace alternatives, and to a much higher percentage of their portfolio than I would have thought. Where do you see opportunities in alternatives these days? Private equity, private credit has become so big, hedge funds. Where do you see alternatives? How do you talk to your clients about that?
So private credit is credit. It's correlated to credit markets. Private equity is equity. It's correlated to equity markets. So they belong in equity and fixed income. And while they're alternatives in the sense that they're liquidity terms and not available to everyone, they're not necessarily diversifying alternatives. I think the opportunities lie in those diversifying alternatives. Things like hedged equity, and there's a million different ways to slice that pie. That's a pro and a con of that asset class. It's, they all kind of get thrown in together, but you can do hedged equity a million different ways. Market neutral, managed futures, global macro, more of those hedge fund type strategies, but also looking at, things like sports rights. I've talked about this a million times because I'm a huge sports fan and it resonates with me. But there's real opportunity here for you to be able to bring diversification into your portfolio using things like that. And while advisors are definitely more open to alternatives than they've been before, it's mostly because their clients are demanding it, right? That's right. It's because if they don't, then they could lose those relationships. And alts, I would argue, is a relationship builder because you can really, I mean, it's such a huge universe. You can really find things that will resonate with your client on a million different levels. So they're seeing that, but 75% of advisors still don't use alts. And the vast majority are allocating something like 5%. Where institutions, it's more like 25 to 30. So there's a huge gap there still. It's going to take a long time to get there. And we as an industry have not done advisors any favor by making investing in any sort of alternative incredibly difficult, operationally cumbersome, and in some cases just annoying. Like just to trade BTAL, which is an alternative ETF. If you tried to do that in your Fidelity or Schwab account, you'd get a pop-up saying that you need to change your risk tolerance to aggressive. And I would argue if I am an aggressive investor, I am definitely not doing hedged equity or market neutral. Like that's like completely counterintuitive. But because of that, it sort of makes people shy away because then you got to change your client's risk tolerance and it's not reflective of reality just to be able to make a trade.
And when you talk sports diversification, sports rights, like I immediately think of the fact that the Atlanta Braves are publicly traded. Is that what you mean, or how do you think about allocation to sports as an alternative investment?
No, I think the private equity aspect of it. So my favorite fund in that space is the one managed by Avenue Capital. Because I think that what they're doing is really interesting. They weren't one of the high flyers that was approved by the NFL, but they invest in MLB and NBA and things of that. Mark Lazary is the kind of founder of that firm. He used to own the Bucks. But he talks about it also in the credit sense. Most people don't realize that banks won't lend to sports teams because the goal to have a franchise that's worth anything is based on whether or not you win, and you don't win if you don't spend, and banks don't like that so much. So, you know, teams, when they need access to credit markets, they don't really have any place to go. So that fund does that. They also do what they call emerging sports. So I've done a bunch of interviews talking about cricket. Like, cricket is an incredibly interesting area. Private equity is looking at buying cricket teams. Women's sports is huge. You know, you have the yacht league that's out there, and some of this, as we have the proliferation of streaming services and everybody trying to get live events because that's really the only way you can get ad dollars, you're seeing this more and more, which gives you more and more opportunity to make money in sports that maybe we wouldn't have paid attention to a while back.
Yeah, lots of different opportunities out there. Shana Sissel, thank you so much for joining us. Shana Sissel, she's the president and CEO of Banrion Capital Management, based in Chicago, but originally from Boston. We've got that all cleared up for next. Looking at the markets here, we do have a little bit of green on the screen here. The S&P's up 0.5%. The Nasdaq's up 0.6%, and the small cappers outperforming today. The Russell 2000 up 1.5%. Yields kind of steady here. 10-year Treasury 4.25%. Not a bad place to be. Lending money to your U.S. government. WTI crude oil, again, off 5.5%, just under $68 per barrel. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker of the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages all pushing higher, still shy of the record closes, though. NVIDIA, that is the most active stock right now, up just over 1%. This is the start of the busiest week for earnings this quarter. Of the 185 companies in the S&P 500 that actually have reported so far, 76% of those have delivered positive earnings surprises. A week before the Fed gathers to set monetary policy, investors also waiting a number of reports. And, of course, the biggest one of all, the jobs report, we get that on Friday. Victoria Fernandez at Cross-Market Global Investments sees negative signals actually coming from the economy.
Most of that is going to be coming from the labor market, and we know that the Fed is really focused on the labor market right now, and so I think it holds even more potential there to drive the markets. So JOLTS report tomorrow, I think, is going to be key. It's going to tell us what hiring looks like. We know hiring has basically been frozen. Temporary jobs have been coming down.
Boeing among the most active right now, down about 0.9%. George Ferguson's going to come up, explain that. McDonald's says quarter pounders returning to menus at all restaurants this week after ruling out the beef patties as the source of that E. coli outbreak. And Wall Street veteran Ed Yardeni says the approaching election could augur the return of bond market vigilantes as the Treasury readies new debt issuance plan. Of course, Ed is the guy who actually coined that term in the first place. S&P 500, 31 points higher. That's up 0.6%, 5839 in the index. The Dow Jones Industrial Average, 296 points higher. That's up 0.7%. The Nasdaq 100 up 111 points. That is up 0.6%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. I'm just loving crude oil. 67.72 for American crude.
Yep.
Down 5.7%. So,
yeah, 277, I think, at the BP station on Route 35 in Wall Township.
So can we guess that's going even lower with these prices? So.
I would think. I thought we would have seen a spike higher, but we didn't really see it. Boeing hitting the market, raising some money, up to 19 large, maybe 14 billion in common, maybe 5 billion in preferred. I think they can get this done pretty quickly. Everybody knows the Boeing name. It's been trading in these levels for a long time, so we know where the value is. George Ferguson, he's the analyst who's responsible for all this stuff. He's a senior aerospace, defense, and airlines analyst for Bloomberg Intelligence. George, if they are able to get this deal done, again, roughly $19 billion of incremental new equity, what's that going to do for him? How much time is that going to buy him?
So we think it probably buys them at least a couple quarters, right? So on the call the other day, on the earnings call for 3Q, they indicated that they thought they'd burn $4.5 billion in 4Q, similar to what they burned in 2Q. At that burn rate, it gets them maybe even 3 quarters worth of burn. I would hope they wouldn't need all that, but we did hear again their outlook that the first half of next year, they expect to be largely a cash use scenario. And for the full year, they'd be cash use. Sounded like they would go cash positive sometime in the second half, they hoped. So 2-3 quarters.
So, George, just in terms of how large this can be, we know that they launched the shelf to raise up to $25 billion. Do you think that gets close to maxing it out just because it's Boeing and they simply probably can?
Well, I guess, they have to, sort of really, there's a lot of dilution here, right? So they have to really be concerned about dilution. But, last I looked, the shares were down a couple percent. So it seemed like the market's not that concerned about whatever dilution is going to occur here. I think the bigger amount they have, right, the more staying power, obviously, the more they can look at the union across the negotiating table and say, we can hang out for a long time. We really need you to rethink your idea on, let's say, something like a pension, right? And so I think, more money helps them there. And look, the aerospace supply chain still isn't stable, right? So Airbus should be sort of moving towards 50 rate on A320 as they close out the year here. We're not seeing it. We're seeing them in the 40s still. So they're sort of proof positive to us. We're seeing more noise out of the engine makers. They're still sort of working to get their supply chains fully functioning coming out of the pandemic. So it's not a given that just once they get this strike past them, that Boeing's going to have, clear skies, ramp up quickly, generate cash, and not have any additional problems. So I think raising above $20 billion, which I think could certainly happen here, just buys them more time in a world that has a lot more variables in it than most other industries. The aerospace industry has more variables right now.
George, what are you hearing about this strike here? Has there been any movement here? Have they been able to narrow in on a topic or two or three? What are you hearing?
I'm hearing it has a lot to do about pensions, right? This weekend I'm hearing noise out of the unions on the West Coast, and that noise, not trying to demean it, it's the commentary is probably a better way of putting it, out of the union is really around a pension. Now, I have heard the machinist president say that if they can't give a pension, Boeing should be prepared to give somewhere else. So it sounds like there is flexibility, but it sounds like a lot of it has to do with retirement plans and what the union thought they lost a decade ago. They did lose the pension a decade ago, and they think they lost a very valuable benefit. And it sounds like there's a lot of focus on that right now.
And we saw the report at the end of last week that the company could sell their Starliner space program. What's your thinking on that? Is a more streamlined Boeing more attractive to equity investors?
Look, I think Boeing could potentially do some streamlining. I frankly think the space business isn't necessarily the place for them to do the streamlining, but I do think they're looking for pieces of the company that aren't core to sort of aircraft, defense aircraft, commercial aircraft. And so space, I think, stands out for that. The problem I have, though, with the space business is they've got a launch business called the United Launch Alliance with Lockheed. It's not as competitive as SpaceX, right? I know from people I talk to in the industry, SpaceX can deliver things into orbit much cheaper. I think the Boeing Lockheed joint venture suffers from, I think, some of those sort of structural challenges inside any big defense contractor. They're not nimble and they're not cheap. And I think, Starliner, they took $4.6 billion to develop a capsule. It's supposed to be the second capsule to the SpaceX capsule, which won as well. NASA wants redundancy to deliver to the International Space Station. There's a commitment in there. I think they have to deliver, or at least have to go to the space station at least twice a year for a number of years. I just don't see NASA, letting them off that requirement. So they're going to have to find someone else to step in to a program they've already developed, to take it over and commit to making, deliveries to the space station or shots to the space station twice a year. I think that they're going to be hard pressed to really get much money from that, because again, they don't deliver cheap. They're overruns on Starliner too. So I just think it's going to be a real challenge to really generate much cash from that. That's been on the market too for a while, and nobody's bitten so far. I understand Blue Origin looked at it, and now they're going to the equity markets for $20 billion in equities. So I think that's a sign of what they think they could generate from that business. It just isn't there, I don't think.
All right, George, thanks so much for the update. Appreciate it. As always, George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. Boeing in the market for, up to $19 billion in some equity, common stock, preferred stock. We'll see. The stock's only off 1% here. So as George was suggesting, it seems like the market's okay with the dilution. I mean, it is what it is. You kind of knew this was coming. It's been well telegraphed.
We reported it back in early October, so almost 4 weeks ago at this point, that they were in talks with advisors. The stock was about 153. Right now, it's at 153.5. So when you think about it, we're continuing to see the stock move sideways. As you mentioned, the big question is what kind of a discount, how quickly does this deal get done, and what are the terms that actually get agreed upon for that convertible debt? Just because as George mentioned, when you talk dilution, if you're an equity investor, sure, you want a clean balance sheet, but you also don't want to get squeezed out of your position.
Yep, it's actually, and then presumably that'll strengthen their position with the union, just in terms of talking about this upcoming contract. All right, folks, coming up, we're going to check in with Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. We get his thoughts on this pretty significant pullback we're seeing in oil. Again, WTI crude oil off 5.4%, just under $68 a barrel. Get his thoughts on where this might settle out here. He's been generally pretty bearish on oil. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, here we are. We got Bailey Lipschultz, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube. So head over to youtube.com/Bloomberg Podcast. WTI crude oil, we've been calling it out all morning. It's off more than 5% here today, just about $68 per barrel, as some of that risk premium from the Mideast tensions maybe pulls back a little bit. The fact that Israel limited its response and its attack in retaliation on Iran. Let's see where we go from here. Mike McGlone, senior commodity strategist for Bloomberg Intelligence, joins us from Miami Beach via Zoom. Mike McGlone, talk to us about what you're seeing in oil today. Mike, is it just that risk premium to some degree coming out of oil?
Hi, Paul. That's the macro, and then part of the macro is it's not alone. Natural gas dropped below its cost of production back in Q1. Iron ore is declining. The grains are declining. The only commodity that's really going up a lot has been gold. So gold, crude oil is just catching up to what most other commodities are doing. It's heading towards its cost of production for a good reason, and that is we're on the back end of Russia's invasion of Ukraine, and all the lessons of history point out it's just a matter of time it gets cheap. So Bloomberg New Energy Finance estimates our cost of production in the U.S. is around $56 a barrel. And then you just look over what's happening globally. There's an excess of supply in the U.S., Canada, out of OPEC spare capacity, and there's declining demand from the number one source of demand for basically the last 5 years or so, and that's China. China's in decline. Just look at their bond yield. So I like to use that term for oil, but it's almost a perfect storm for normalization in commodities, which means crude oil typically gets cheap after getting too expensive. And yes, just the latest, I guess you could say, maybe de-escalation of the potential for supply cuts in the Middle East is part of it. But that's what I've been pointing out all along. The market's priced for risks of more significant supply cuts from major sources in the Middle East, and it's not getting it. In fact, these geopolitical tensions are creating higher prices, which is increasing the things that have been pressuring crude oil for about the last almost 15 years, and that's the excess of supply and actually increasing exports out of the U.S.
And Mike, you mentioned, though, getting cheaper, getting closer to that cost of production. When would you, if you were a trader, start buying crude and start buying some of these other commodities that are deep in the red?
There you go. So I'm glad you asked it, because that happened in natural gas. Natural gas right now is about $2.03 per MMBTU. The low this year is around 1.5. It was a level first traded in 1990 in futures. It got cheap. It might bounce to 3, maybe 4, but it's stuck in a morbid range for a while. Same thing in the grains. The cost of production of natural gas in the U.S. is around 2. And corn's low this year is around 3.75 or so. That's right around the cost of production. But what's happening is all these markets are going back to levels they were right before COVID. 2019, the average price for crude oil is around $57 a barrel that year. Corn, the average price was below 4. Soybeans. So that's what's happening is all markets are getting, it's a question of how and when to buy. It's more about buying dips and looking for rips in bear markets. And that's what's really been happening. I'm glad you went there, because managed money net positions, i.e. futures, speculative positions in futures, have been doing pretty well this year. They've been way short the grains, and they got it cover those shorts, so they made money. And then they tilted their attention to the petroleum, crude oil, and they're making some good money there, and they're just mostly lightened up on those shorts, and now they're just kind of riding. The question is, where's the next big trade in commodities? And that's my point. Well, we'll have to see what happens in the election, but the bottom line is gold is basically beating everything. And on a global commodity scale, when crude oil and iron ore and grains go down and gold's going up, that's a sign of global recessionary leanings.
All right, just to show you my complete ignorance of all things related to farming, when is the harvest and how's the harvest looking, Mike?
Corn Belt, it's a bumper. It's basically done. And the number I want our viewers to listeners to remember is 184 bushels of corn per acre. That's the average this year in the Corn Belt. Paul, that's the highest ever. It's double what it was.
At a cocktail party.
Yeah, there you go. You'll get, you'll get a lot of attention. But it's double what it was in 1973, 74, and that's significant because that's when we had the big pump from Russians. It was called the Great Grain Robbery. Russia had a major drought, and they imported a lot of grain, and that's the first time corn traded 4. Right now, corn's at 4. So that's the key thing to remember. We just had decent weather, favorable weather, but as we tilt over to the growing season in South America, you basically need a bad growing season. You need bad weather. Otherwise, we're going to get more and more grain until prices pressure production. It's just the typical way it works. But this year was a great weather year. The thing I'm worried about is you're seeing low river levels in most of the world now. So if that's a sign that we're going to get bad weather, mainly, and you've seen the signs on the commodities that kind of sit grown around the equator, like coffee and cocoa. They've bumped up a lot, but overall, it's just it's a penchant for more supply with less, greater productivity every day means food and agricultural prices and grain prices are just going lower.
All right, we'll do pork bellies next time, Mike. Mike McGlone, senior commodity strategist for Bloomberg Intelligence. You can go energy, nat gas, gold, silver, to pork bellies, to soybeans, to corn. He knows it all.
It's impressive. It covers a lot.
It covers a lot. And his dashboard, BI space COM, gets you the commodities dashboard there. But he was actually raised on a farm in somewhere, God knows somewhere, Indiana, I think, or something.
In the use case than I imagine. I mean, I'm from Southern California, so I don't have much of an experience with the agriculture.
Yeah, I got nothing, but I don't know. So, but Mike McGlone is our go-to guy, and we appreciate having access to him.
I tried to grow corn once in the backyard.
How'd that go?
Actually, not too bad. I had to actually fertilize it myself with a Q-tip because there were just so few stalks. It worked.
Sweet Jersey corn. It is a thing, people. Some really good corn.
Grow it right above the septic tank. It's like
there you go. It
perfect.
grew like crazy. Go figure that out. Looking at the markets here, we do have green on the screen here. S&P 500 up 0.5%. Coming up in just moments, we're going to check in with Sarah Fryer. She is the CFO of OpenAI. She's going to be speaking with Bloomberg's Ed Ludlow in Las Vegas. We'll simulcast that with Bloomberg Television to get the latest on technology on AI. That's coming up in just moments. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in just a few moments, we're going to check in with Bloomberg Technology host Ed Ludlow. He's in Las Vegas. He's not throwing bones. He's actually there working. He's going to chat with Sarah Fryer. She's an OpenAI CFO, and get the latest on tech spending, in particular on the AI chips. Where are we going here with the spending there and the development of AI? That's coming up right now. Let's take a listen.
Welcome to our Bloomberg television and radio audiences around the world. We're live in Las Vegas. This is Money 2020, and we're joined by OpenAI's CFO, Sarah Fryer. And this is interesting. You have some history with Money 2020, history with fintech, but that's kind of the point. And so much of the focus to date on OpenAI has been, I guess, a personal use of ChatGPT. But let's start with the banks and finance. How much of that is made up in your business?
Yeah, thank you, Ed. It's so great to be here. And you're right, Money 2020, I've seen it progress through the years. What an incredible event it is today. And we're here because our customers are here. Right. AI is happening right now. It's not experimental. It's not something that people are just playing around with. Banks, financial institutions, fintechs, people are using it today in their business.
Well, there's the Morgan Stanley case study.
Yeah.
You know, this week alone or past week, Bank of America has talked about how many patents it's got in machine learning and artificial intelligence. But do you actually have a tangible sense of what it is those financial institutions are doing with your large language models?
Yes, absolutely. So Morgan Stanley is a great example. In their wealth management business, they're using our models both to help wealth advisors be more productive. They're using it as a way to create better financial advice and outcomes for customers. We're seeing folks like Klarna use it in customer service. CEO of Klarna has been very loud and proud on this front. That's another great case study in terms of productivity improvements. And then we have banks like BBVA that are using it all across their business. And that's really our message here. It's just get started. Get enterprise ChatGPT rolled out to your organization. See what your people do with it. Help them just get started, whether they're in marketing, in finance, in product. everyone can have really interesting
Even
use
if
cases.
we are just getting started, can you help our audience understand how meaningful a contribution the financial services sector, fintech, makes to OpenAI's revenue?
Yeah, so today if you look at our largest verticals, areas like EDU, education, healthcare, but financials is probably third. And again, I think that's because they are typically early adopters. They're often willing to take that risk because they see the upside in terms of driving more revenue, but they also are very good at managing their cost and efficiency. And it's great when you get an early adopter like Morgan Stanley because it tends to lead the way. I can't think of a wealth management client today that's not coming to us to say, what do we need to do? How do we get started?
Banks in particular can be sensitive to pricing. There's a lot of curiosity, not just in sort of as a consumer, how much I'm paying on a monthly basis for ChatGPT access, but at the enterprise level as well. Reports are, for example, at the corporate per user level, you're thinking at about $2,000 per head. How are you managing us? Give us insight into the pricing strategy.
Sure, so pricing is super interesting because we're really trying to think about value and what is this person getting from this tool? And I actually don't think we've done a great job of that yet ourselves. Despite that, we have 250 million weekly active users, and of that, 5-6% have actually converted to be plus customers, so they're paying. But if you look at the value, when we were rolling out O1, our reasoning model, and this is a model that stops and thinks for you, it actually does hard problems. I was watching a lawyer in action using it to create a brief, and at the end we said to him, what would you have paid for that? Like if you had a paralegal doing that, he was like easily $1,000 to $2,000 per hour. And this is someone who's using it, if it's an enterprise per seat, it's probably $60 per month. And this is someone who would have paid $1,000 to $2,000 per hour. So I think that there's a lot of value that is in the product today, but we're just trying to make sure people can get started, can actually see the outcomes, and over time we believe that value to price will come into alignment.
There's a balance, right, between what's of value to your customer, but also, you have to account for OpenAI's spending, which we've talked about endlessly, particularly on the compute side. What is that balance in what works best for you and your customer base?
Yeah, so first and foremost, what's most important to us is to stay on the frontier. Building the frontier models, making sure that we are bringing, ultimately, AGI to the benefit of humanity. To do that, it's expensive. We have to invest in large-scale compute. And so to me, there's really two ways to finance that. It's either through the free cash flows of the business, spoken like a good CFO, or it's through raising equity and debt financing because investors can see the long-term potential of this business. So on the former, on the cash flows of the business, we want to make sure we keep growing that business. I think we have been wowed at just the pace of growth, particularly on the consumer side. It's about 75% of our business today. But even our enterprise businesses, they are young, but they are already doing an incredible amount of annualized revenue. And we're really excited by the potential there.
For our Bloomberg television and radio audience worldwide, we're in Las Vegas at Money 2020, and we're speaking to the OpenAI CFO, Sarah Fryer, and you talked there about the consumer business. Something very interesting is the future business model. Ad-supported tiers, for example, very specifically segmented pricing. How do you think about that, Sarah?
Yeah, so I think you always want to stay open to alternate business models or ways that you can layer a new business model on top. Now, the key for us is always access. How do we make sure as many people as possible get access to this tool? And that's on a global stage, by the way. And so to do that, sometimes you do pivot away from just pure subscription models to models like ads. My last company was all ads, so I've definitely experienced this. I think ads have their place, but you have to be really mindful of where. I think in areas like commerce, ads are great, right? If I do a ChatGPT prompt for black high-heeled shoes, something I probably would do, I actually don't want a history of the black high-heeled shoe. I want 5 stores I could buy from right now, probably e-commerce. So that's why companies like Shopify are great customers of ours as well. But there are other places where actually the ad model doesn't make as much sense. You want to get the consumer to the answer they need as fast as possible. And I think that's where ChatGPT is a really very different platform from, say, something like Google Search.
You are still relatively early in this role, but it's been 2 years since the original deal with Microsoft was negotiated, and that compute relationship is critically important.
Yes.
Will those terms change? Are they fluid, or are you just sticking to the contract that was on your desk when you arrived.
No, and it's actually longer than 2 years. Microsoft and OpenAI have been partners, I think, for actually almost 5 years. So they really came to us when we were a research lab. And the deal that we've worked with them is they do provide compute exclusively, and we give them the IP around artificial intelligence. So it's incredible. The products they're rolling out today are really built atop of OpenAI's AI. As we go forward and as we get bigger, we absolutely see a maturing in that relationship. And so for consumer benefit, we want to make sure consumers always get access to what they need. That will probably mean compute for more parties over time. Right? We did discuss the Oracle deal, or Oracle discussed it a few quarters back. And I think that's a good starting point for just how do we maximize compute so we maximize the impact for consumers.
The catchphrase or buzzword of this year, I think, has been ship product. But you're the CFO, and so there's a tension between the cost of doing so and the need to move quickly. I think Sam has denied recently reports that the next model will be out by year end. What can you tell us about the path forward there, the cadence of new models to come?
Yeah, I mean, I think you hit the nail on the head. Ship product, product velocity, that is the mantra internally to OpenAI, and it's something I've just been so wowed by since I started, is just how fast we do ship products, right? Even in my short tenure, I've seen O1 come out, our reasoning model, that huge step forward from kind of what has been more the ChatGPT model series. We've launched things like advanced speech to the model itself. The O series, 4.0 and now 4.0 Mini. For example, 4.0 Mini, which is our distilled model, is 1/100th the cost of what the original ChatGPT 4 model was. That is incredible for developers, and that's why you see the API products be so successful. And again, it goes back to how do we get this into the hands of many? Developers are a force multiplier, and today I'm super proud. I think every single AI unicorn is built atop of OpenAI's API, and that will tell you how we are the frontier model.
I think when I started covering OpenAI, there was around 500 people at the company. It's probably nearer 2,000 now.
Yeah.
Part of that as the CFO is to keep talent, long-serving talent, happy. My understanding is that tenders will be a big part of that, giving employees liquidity. What will be the cadence and sort of increments of that going forward, Sarah?
Yeah, so we are a company that has done tenders to date, and part of that is because we are in a competitive market, particularly for research talent. When I think about what keeps you on that front edge of the best models out there, it is compute, but more importantly, it's people. It's great researchers. And so in order to compete with companies that have liquidity already in their stock, public companies, we have taken this approach to tenders, a little bit like others in the space. SpaceX is a great example.
SpaceX is one we've covered closely, yes.
And so we want to be able to keep doing that. We want to do it thoughtfully and mindfully, knowing that the other rule one is to keep it on the field, make sure we have money for compute. So it's always a balance, but we do think it's important to give our researchers that access.
For our Bloomberg television and radio audience all around the globe, we're in Las Vegas and we're speaking to the OpenAI CFO, Sarah Fryer. OpenAI is a software company, or it was. Now a lot of the focus is on Sam and the team's ambitions with safeguarding infrastructure. How involved are you in that, talking about the sort of construction of 5 gigawatt data centers and the financing of such things?
Yeah.
Was that a surprise to come in and sort of think, okay, I need to get a handle on that project?
Not a surprise, but definitely a stretch. It's new territory for me.
Stretch from a capital perspective?
Stretch from a capital and also just my own learning, frankly. I think we're all learning in this space. Infrastructure is destiny. It's this wonderful phrase that Chris Lehane has managed to get out there in the world. And we do think that this build is important. It's important for U.S. competitiveness. It's important for world productivity. It's important even with a national security lens. And so you are right. One of the key jobs I need to do is to figure out that capital allocation story. It's going to be both a working with partners. It's going to be raising financing.
Yes.
But it's always making sure that we are staying ahead of what will be required, call it 2-3 years out, because you can't just turn on compute today if you need it. You actually have to have thought about it probably about 3 years ahead.
On that, if I may, one of the things I heard from some of your investors is you did a very good job early in explaining the basics of the plan, but the ultimate goal is AGI.
That's correct.
How confident do you feel you have the sort of infrastructure in place or a plan to have it for AGI?
I think we have the plan in place. I think if Sam were sitting on the seat, he would tell you AGI is closer than most think. But
He
I
would.
know,
What would you say?
I would agree based on what I'm seeing. Like one of the best meetings I get to go to once in a while is the research meeting, and it would blow your mind to see what's already coming and what, as we have learned how to take reasoning models like O1 Preview on top of GPT models and the interplay between those, you're now really starting to see some incredible outcomes, PhD level outcomes, where you have in your pocket human intelligence that is PhD level in physics, in biology, in chemistry, in English literature, like whatever the job is you need to do. If you're a healthcare researcher, if you're a banker, if you're in education, the tool that you are now carrying, the power there, blows my mind.
Sarah, you touched on it a moment ago, financing, the need to raise capital. Yeah. You've just done a pretty astonishing large round, but a follow-on. I mean, you must have a good sense of the cadence of needing to raise funds on an annual basis. I don't know how you plan it.
Yeah, so it goes back to what you said, which is really understanding in your plan, what are your big expenses? Compute is the biggest, but we also need to run a company. So we have real operating expenses. Right. We're right in the guts right now of FY25 planning. That is usually a 3-year outlook in most companies, and for us it needs to be because we have to make those compute decisions. And with that comes then, okay, what is our balance sheet going to look like? What's our cash burn rate? At what point can we generate enough free cash flow to actually fund the business? Not ready to tell you that today. Okay. That's for the next time we talk. And then on top of that, how do I help keep bringing our syndicate of investors along? I called them with us.
We are less than a week from the election, and I think about my own use of 4.0. I've not used it related to the election, searching for information, but are you preparing for that election, and what impact might it have on OpenAI?
Yeah, we absolutely are. Like, we have to be very mindful from a safety perspective. Today, if you do searching around the election, you'll actually see that often we will not return a response, or we'll return with a caveat that says to be mindful of your sources. And I think I learned a lot of that, frankly, at Nextdoor, right? You cannot, you need to be careful of not being paternalistic or maternalistic around people. People need to be able to find information, make their own educated decisions. But at the same time, you also need to be very aware when you have a platform that today services 250 million people every single week, we have to recognize that they're going to want to do things, and we need to provide avenues, but in a safe and secure way.
OpenAI CFO Sarah Fryer here live in Las Vegas. Thank you very much.
Thanks, Ed.
Good
that was
to catch
great.
up. Back to you.
All right, fascinating discussion. Bloomberg Technology host Ed Ludlow in Las Vegas speaking with Sarah Fryer, the CFO of OpenAI, talking about the future of AI and that money. 2020 conference out there in Vegas gets all the fintech people together, and AI is becoming such a huge part of that part of the technology stack. So it makes sense for OpenAI to be out there. Let's switch gears to the global auto industry. A little bit different story there. As best I can tell, the two major headwinds for the auto industry is one, China, which is obviously a huge growth market for the global auto industry. It's slowing, and the local brands there are improving dramatically, so they're getting much more competitive there. And then the second thing is, oh yeah, they got this whole transition to EVs, and how do you do that? We heard some really cautious news out of Volkswagen today. Volkswagen eyes closing 3 German factories in a cost-cutting push. Let's check in with Steve Mann. He covers the global auto industry for Bloomberg Intelligence. Steve, talk to us first about this Volkswagen news here. I mean, shutting German factories, they don't typically do that. So how much hurt are they feeling over there at VW?
Oh, they're in a world of pain at the moment. You kind of mentioned it, Paul. They are hurting around the world in all 3 major regions of the auto market. You know, U.S. they're not that big of they don't have that big of a presence in the U.S. Europe, you know, its sales are down. You're not only hearing it from Volkswagen, but also Stellantis as well. You know, their stock is down quite a bit over the past few months. And then China. You know, the Chinese OEMs are taking a lot of market share. In China, they're entering the EU market. Like you said earlier, you know, Chinese automakers are just much quicker in transitioning to EVs in that region than any of the foreign OEMs operating in China at the moment. So, you know, Volkswagen is feeling it.
And how does that kind of position a company in Europe, one of the biggest automakers, trying to compete with U.S. automakers who are having their own issues, and as well as kind of the potential pent-up demand, at least in terms of capacity, production capacity in China?
Yeah. The pent-up capacity in China is really not EV capacity. It's actually really ICE capacity, internal combustion engine vehicle capacity. There's been a lot of closing of those plants in China. Volkswagen has closed one of its plants in China with its partner, Shanghai Auto, SAIC. Ford has closed a number of plants. Hyundai has closed a number of plants. And these are all companies that have not transitioned to EV as fast as the OEMs. Companies like GM and BYD taking huge market share from the foreign automakers. BYD is actually the biggest automaker in terms of volume in China.
All right, so what is Global Auto to do about China? What is the strategy, do you think? Because I think if I've got these Chinese companies that are getting better and better every day, what do I do there? Do I walk away from this market? I can't do that. It's too big.
Yeah, I know. If you look at the foreign OEMs operating in China, 5 years ago they had market share over 50%. In the last couple of years, they basically have changed position. The Chinese OEM has more and more capacity, more and more market share, and it's growing. There's a number of ways they can attack this. They either invest a lot of money and really grow EVs, and not just EVs, but this user interface. Chinese consumers are buying cars because they like the user interface that the Chinese OEMs are offering them. So they need to build more EVs. They need to look at revamping their software to cater to the local customers in China. Or the other option is really to close shop and refocus their investments and their costs. They know how to operate in Europe. They know how to operate in the U.S. They know how to sell more cars in their local markets. That may be one option, is to just retrench. But that's not an unfortunate approach if they had to do that in the biggest auto market in the world.
When I look at Europe, are there any automakers well positioned? I mean, Stellantis is getting hit by poor performance in the U.S. BMW has an expensive recall. Mercedes-Benz has been struggling in China. Like, is anyone winning?
Well, relatively speaking, I think the German luxury automakers, the BMW, Mercedes, are faring better than the mass market, but they're also feeling the pain. Right, they're all the luxury brands are also feeling the pain. BMW and Mercedes just reported, lower sales in China, and I also am concerned, and it's a matter of time because there are companies like NIO, there are companies like XPeng. They're also moving up market, competing with the Mercedes and BMW. So I think, relatively speaking, just to answer your question, the luxuries are doing better, but time will tell if they can maintain some of the sales that they have in China.
All right, Steve, thanks so much for joining us there. Steve Mann, he covers the global autos and industrials for Bloomberg Intelligence. He's based down in our Princeton, New Jersey office. So getting the latest on VW, closing some plants, cutting some staff, trying to cut some costs here as they face some headwinds coming out of China, as well as the continued costs of going over to electric vehicles. Right now, let's step back and get a little bit of a sense of what's going on in the markets. We'll do a Bloomberg Business Flash with Mr. John Tucker.
All right, stocks are higher right now. This Bloomberg Business Flash, Paul, being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. Stocks are climbing ahead of a pretty big week for profit reports from big tech stocks. Oil prices, meanwhile, tumbling toward their worst loss in more than a year. Energy, in fact, is the worst performing major industry group in the S&P 500. Jump in Google, parent Alphabet, and Meta shares helping lead stocks higher. 408 stocks in the S&P 500 are up, 94 are down. Meantime, Ed Yardeni at Yardeni Research believes stocks are in a melt-up.
I think it has been a bit of a melt-up. I mean, look, we're looking at valuation multiples that are getting right up there, close to where we were right before the tech wreck in the late 1990s. We saw a melt up that got the forward PE of the S&P 500 up to 25. Now we're at 22, so it's starting to look like it.
Ed's also the guy who turned the phrase bond vigilante. He says they could come back, push rates higher to instill a measure of some fiscal restraint. S&P 500 25 points higher. That's up 0.5%, 58.34 in the index. The Dow Jones Industrial Average 327 points. The Nasdaq 100 64 points higher. That is up 0.3%. As for those yields, the 2-year 2 basis points higher. That's at 4.12. The 10-year is up close to 3 basis points. That is at 4.26. And once again, NYMEX crude, worth mentioning, down 5.5%, 67.84 a barrel. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. Yeah, that is your Bloomberg Business Flash. Bailey and Paul.
All right, John Tucker, thank you so much. We appreciate that. Bailey Lipschultz sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Boy, if you weren't paying attention, the 10-year Treasury just in the last 5 weeks has gone from a yield of 3.6% to 4.26%, kind of where we are today. That's a big time move here. I don't know what's going on out there in the bond market, but our next guest does. RJ Gallo, he's a senior portfolio manager of fixed income at Federated Hermes, coming to us from Pittsburgh, PA. No, they do not have a team in the World Series, but they have a good football team. So, RJ, thanks so much for joining us here. My Giants are coming out to Pittsburgh tonight. Be nice to them. What's going on in the fixed income market? Again, that 10-year Treasury kind of got me by surprise, the moves we've seen in rates. What's going on out there?
Yeah, well, good morning. Yeah, Steelers-Giants tonight, always excited. In terms of the rates market, there's been quite a turn of events, basically since the Fed's eased. The Fed eased 50 basis points, and you might recall, leading into that meeting, the expectation was 25. The Fed seemed to use media outlets to lay the groundwork for a 50 basis point ease, a bold move when the economy is in fact doing well. Since the Fed meeting and the 50 basis point ease, the data has in fact affirmed that the economy is doing pretty well. So you have the Fed layering in a large first move in what will be a path of easing, and an economy that has been quite resilient on the labor and growth front in terms of things like retail sales. And CPI came in a little firmer than expected. So you have an economy that's not showing signs of recession, a Fed that's committed to landing the economy outside of recession, a soft landing as we've all come to call it. And then you have the election coming up. All those factors have leaned towards a significant repricing higher in yield. You mentioned the 10-year Treasury. I think if you take a look at the implied rate on SOFR futures out in June of 2026, the implied rate has risen almost 80 basis points since September 10th. It is now 355. It was once below 280.
Wow.
So all those factors have really hit the bond market pretty hard. It's now priced, I think, for perhaps an inflationary election outcome, and that's the next big focus, the election itself.
Well, within that, we're 8 days from the election. How should investors be positioning, just given the polls that we've been seeing and how kind of markets have seemingly been moving ahead of it?
Yeah, well, the markets certainly have been moving. And by markets, I'm sort of speaking broadly. The betting markets, starting probably in the first week of October, just started shifting in the direction of a Trump win and a red sweep as the most probable of outcomes. According to some of them, 40 to 45, 50% probability of a red sweep. That's a big change from where they were in September. The financial markets, including the impact on rates, I think the economy's resilience that I just described, and the unwind of expectations to some degree of a deep Fed easing path, those were the primary drivers. But the election risk and the prospect of an inflationary set of policies from a Trump 2.0 were secondary factors there. I think it's safe to say that the market now is leaning heavily in the direction that we just described, but I would still think some caution is warranted. We're leaning a little bit short, not aggressively so. There's a lot of other complex factors out there. Kamala Harris could surprise us on election day. We could actually have an indeterminate election outcome. You go back to 2000, a highly indeterminate outcome between Gore and George W. Bush led to yields falling and flight to quality demand and risk assets struggling. If we have prolonged indecision this time, you might see a rerun of that script.
So when you guys get together for your Monday morning meeting, you plot out the week, where do you guys see value these days?
It's a great question. You know, so we started off the year thinking the bond market was going to produce us pretty good total returns. And then that was sort of tempered earlier in 2024 by the fact that inflation had a bit of a resurgence and started getting a little sticky. We had a great run there from, say, April all the way up through the expectations of the Fed easing. But now the total returns are getting diminished yet again. So, for example, if you look at the aggregate index, year-to-date total return is just up 2%. Over the last 3 months, it's just 1.2, and it's been a brutal October. Over the last 30 days, we've lost 2.5%, and month to date, we've lost 2.3%. So just betting on rates has not been compelling, but that's not all that we do. We obviously look at and actively manage duration, but we realize calling rates is a dicey prospect. So we focus very heavily on other variables. So the yield curve has steepened sharply in relation to the Fed's easing and the prospect of inflationary policies to come. We've played that rather well in our number of our portfolios, positioning for yield curve steepening, and that's been a way to generate alpha within a fixed income portfolio. When it comes to credit, we've been overweight mortgages. We remain cautious on high yield corporates where we think spreads are just not enticing enough. But the good news about a fixed income portfolio, a highly diversified one, is you can move across sectors to look for opportunities. You can move up and down the yield curve for changes in its slope and shape, in addition to taking some positions on duration. So all in all, we've been deploying all those different tools to varying degrees throughout what's been a moderate return, but a positive return year.
All right, RJ, thanks so much for joining us. As always, RJ Gallo, Senior Portfolio Manager, Fixed Income over there at Federated Hermes. A lot of things have changed since I left BI, Bloomberg Intelligence. You can actually take a C day, not come in, because it's a heavy earnings day.
Interesting.
I would have called scam on that in a big time and not allowed that.
Wait a second. You don't have to come in because there's a lot of work? Is that it?
There's a new sheriff in town, I guess.
I'm staying home.
Michael
There's
Halen,
too
one
much
of the
work
smartest
today.
analysts we have at Bloomberg Intelligence is Michael Halen. He follows all the restaurants for us. Hey, Mike, talk to us about McDonald's. I know we're bringing the Quarter Pounder back on the menu. I'm a number 2 guy with a Coke, by the way, in case anybody's keeping score out there. What is the long-lasting or longer-lasting impact on McDonald's, if anything, on this, Mike?
You know, it's going to depend on how bad it gets. I don't think there's going to be significant long-term damage to the brand, but we're more concerned about the short term, right? Like in our opinion, with the stock only trading at 7% from the all-time highs, with it's still trading at a 10% premium to quick service peers. We don't think it's the share price and the valuation are reflect for headline risk, right? And so it started out as about 50 people were sick and 10 hospitalized. Now it's about 75 and more than 20 hospitalized. And now that it's in the news, there's a lot of people out there that just thought they had a stomach virus or something like that are going to end up going to the doctor and seeing if they had E. coli, and there's going to be a large class action suit to follow. So as these headlines roll through, we think, you know, there's some risk to this story, and that's kind of what we wrote. We published first thing on Friday. The stock's down a little bit from then, but still pretty close to all-time highs.
Does it matter if, according to Bloomberg News reporting, according to McDonald's, if it stemmed from onions instead of the ground beef?
That was good news, and the stock's trading like that. I think it's up 1.5%. That's definitely good news because it was limited to this one item that's the Quarter Pounder with cheese that sells it with, you know, raw slivered onions. So there's not risk that it's also in other items. I think there's also kind of take some of the risk off the table that it was negligence on the part of their cooks undercooking the burgers, right? So this is definitely a positive for the brand. But, you know, we just got a report from our partners at Second Measure here. Andrew McNellis did some nice work. He said same-store sales and traffic seem to be down about 9% last week. Yeah, so you know, what we said last week seems to be holding true. It's going to definitely impact the fourth quarter here. And we expect it to bleed into early next year as well.
Hey, Mike, if we take a step back from McDonald's and just look at the quick service segment today, what kind of consumer behavior are you seeing there?
Yeah, we're seeing low-income consumers pull back on visits. That's what we've been seeing now for a little over a year. It's intensified this year. People are being more discerning with where they spend their dollars. Low-income consumers are shopping more at the grocery stores to save themselves money. And so the timing of this wasn't great for McDonald's because it seems like they were just starting to reestablish themselves as the #1 value player with that $5 meal, right? And you know, if you look at the way the stock has acted, it would tell you that they probably have a pretty solid Q3 report coming through tomorrow morning. So, you know, for a chain that was kind of, you know, not performing to its usual high standards, we'll say, earlier this year, that seems to have been getting some footing back. It was just kind of tough timing for this to happen.
And Mike, if we're seeing lower income consumers shifting their spending habits, what company or brand would benefit from this? Instead of going to McDonald's for a quarter pounder, where would a consumer seemingly shift to?
Yeah, well, you know, I'd say chains that don't have a ton of exposure to low income consumers are better off. Fine dining has recovered pretty nicely over the last 5 months or so. Chains like Chipotle that have less exposure to low-income consumers. Wingstop, who's been able to expand away from low-income consumers and kind of attract those, you know, young, childless, digital savvy customers that are spending more. They're doing a really great job. Places like Texas Roadhouse, which provide a lot of value on the plate in the eyes of the consumer, they're doing really well. So we expect to, you know, continue to see this bifurcation where winners continue to gain share because they're providing good food and a lot of value and a good experience. And the chains that are just kind of discounting to try to get people back in the door, we think are going to continue to struggle. When you offer discounts, you're telling your customers that the food's not worth the menu price.
Mike, thanks. Great stuff as always. Michael Halen, he's the senior restaurant and food service analyst for Bloomberg Intelligence, giving us the latest there on McDonald's. Coming up in just a moment, BNEF. Corey Cantor, he's the lead U.S. electric vehicle analyst. We'll get the latest on Tesla and the overall EV market that's coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they are pushing higher right now, off the best levels of the session. This is a week for some big data ahead of the next Fed meeting. 10 of the 11 major industry groups in the S&P 500 up right now. Financials in the lead. The biggest drag that's coming from energy as oil prices take a dive. That's actually good for some stocks, including the airlines. Those stocks, they are higher. A busy week for earnings so far this quarter. The busiest, in fact. Lori Calvasina at RBC Capital Markets so far hasn't been impressed with the company earnings.
It's not that it's a terrible reporting season, but it just feels a little disappointing. I think it raises the bar for everyone, and I think we continue to field questions about why this market has not been able to really have a clean rotation away from that Mag 7 group into the broader market.
And right now, the Dow Jones Industrial Average up 269 points. That's a rise of 0.6%. S&P 500, 20 points higher. That's up about 0.4%. The Nasdaq 100, 45 points higher. And that is up 0.2%. Two-year yield is up just about 4 basis points. So that's limiting the gains for stocks. 4.14%. The 10-year closing in on 4 basis points higher right now. That is at 4.28. Elon Musk news. Doesn't have anything to do with the Tesla, though.
All right.
Musk has been sued by the Philadelphia District Attorney, just getting this news, over his Political Action Committee $1 million day sweepstakes targeting the swing state voters in the final days of the presidential election. So there you go. We check the markets for you and everything else all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Bailey and Paul.
All right, John Tucker, thank you so much. We appreciate that. Bailey Lipschultz sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we're also streaming live on YouTube, so check us out there. So the question is, what would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. You just have to visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey, which is hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcast. We got an election coming up, so I'm told, next week. One of the major issues from a policy perspective that might see a big difference depending upon who's in the White House is kind of renewable energy, electric vehicles, all that kind of stuff. So let's check it out. Corey Cantor joins us, the lead U.S. electric vehicle analyst. Yes, we have one of those. He's at BNEF. Those are the new energy finance people. He's in our Bloomberg Interactive Broker studio. Corey, how does your market, the electric vehicle market, looking at this election as to a Trump presidency versus a potential Harris presidency? Are there material differences?
Yeah, there are pretty big differences. And great to be here with you again, Paul and Bailey, still doing the EV thing. We basically are 1 week out of a pretty pivotal moment of implementation of some pretty major U.S. federal policies. So everything from federal fuel economy standards, that's the kind of miles per gallon of new vehicles, which electric vehicles help automakers achieve, to the implementation of the Inflation Reduction Act. So even though the law was passed now over 2 years ago, you're going to see those loans and grants from the federal government impacted all the way up to the $7,500 clean car EV tax credit that people know and love in some cases. So depending on who wins, obviously with the IRA, you're going to need Congress's input on that, but there are things that the Trump administration could do very early on the implementation side to make those credits a bit more restrictive. So it's going to be big, but also a split decision could have an impact too if you have, say, a Republican Congress with Kamala Harris as president or vice versa.
And how does that actually impact the ability for these car makers to sell cars? When I look at targets of Biden administration having a certain number of EVs, I'm from California, where they lay out these overly ambitious goals 5, 6, 7 years down the road and then seemingly chop them down when they get closer.
Yeah, Bailey, I mean, even beyond that, there's been a kind of back and forth between California and the rest of the country for a long time, known as, the California Advanced Clean Cars 2 policy, which aims to have 100% of all new sales by 2035 as electric, 80% fully electric, 20% plug-in hybrid. And so last time Trump was elected, there was a lot of lawsuits, a lot of uncertainty in the market. It makes it very difficult from an automaker perspective to actually plan. And so these automakers for a long time have wanted both the carrots, which are these IRA kind of subsidies and incentives on grants and loans, and then they'd be willing to take the stick, which is the fuel economy standards. So we have to see how it shapes out, but from the automakers that we speak to, it's a pretty confusing policy environment, but given that the globe is moving towards electric vehicles and cleaner cars in general, they have to kind of prepare to move that way regardless, and it's just how quickly in the US are they going to move in that direction.
The Chinese are moving very aggressively. How do you expect them to do outside of China? Will there be market for Chinese EVs in Europe, in the US?
Yeah, it's a really good question, Paul. And looking at the data which we do at BNEF, you can see Chinese automakers like BYD making up ground in places like Brazil, in places like Latin America, in places like Israel, where you might not expect to see Chinese automakers. They've been moving into Europe, and there's been a pushback with all the tariffs and back and forth there. I think that's also why the U.S. election does have a big impact, because if there's no kind of countervailing force coming out of the U.S., you see what's going on with Volkswagen on the European side today, it's going to maybe make the road easier for those Chinese automakers on electric to kind of shift into those export markets, because if Tesla isn't focused on making more affordable EVs, then there's really only going to be one major player in town. It doesn't mean that Chinese automakers are going to be the only ones who are making mass EVs, but it's a pretty big transformation at the global auto market level, just like when the Japanese automakers came onto the scene. So I think that's the way I like to think about it. It doesn't mean that EVs are going to be sold everywhere overnight, but without a kind of other major automaker, that's where I think a lot of these countries are going to turn.
And if we do see tariffs on some magnitude, what does that actually mean for the market, for Elon Musk's Tesla, who he's had a very prominent role campaigning for Donald Trump, as well as other companies?
I think when it comes to U.S. tariffs, that could buy you, I think, some time. You look at the 100% tariff that the Biden administration put on Chinese EV makers. Well, there weren't that many Chinese EV makers selling electric vehicles here currently. Geely Group, which owns Volvo and Polestar, was pretty much the major automaker impacted. So that's why you saw those prices, or the Volvo EX30, which is a really popular model globally, not sold here yet. It's keeping BYD out for a little bit longer, but if the automakers like GM or Stellantis or Ford aren't helped or don't move towards electric vehicles, maybe it buys you 2, 3, 4 years. But all the while, BYD and other Chinese automakers are making more investments in battery technology. And I think regardless of who wins, you need to see more of those investments here on batteries, because those are going to be important not only for electric vehicles, but for the grid as well. And you're letting China get a major competitive advantage.
What are the U.S. manufacturers doing? Have they pulled back on their EV investments?
We've definitely seen at a global level those EV targets moving back. I think Ford in particular, you saw them move their new EV models out a couple years. So it's less so on the dollar amount and more pushing it back. GM has seen better EV sales. In fact, their third quarter this year was the best in the U.S. that they had seen to date, with the Equinox and Blazer and Lyriq really taking off. To make one bright point, Bailey, your home state of California actually saw in that third quarter the best EV share of sales they've ever had at 27%. So that's 23%, about almost 24% fully electric, the rest plug-in hybrid.
Wow, so that's pretty good. What's the U.S. average?
U.S. average has been at about 10% now, 9.5%, 10%.
You guys are just so far ahead.
California, twice the average. But what's significant about that is California had been stuck at about 25%. Tesla actually, for 4 quarters in a row in California, has seen decline in deliveries because of, I think, some of the kind of Tesla or Musk fatigue. And so to see California begin to grow again from the other automakers, even as Tesla's pullback, is pretty significant.
All right, Corey, good stuff as always. Corey Cantor, he's a lead U.S. electric vehicle analyst at BNEF, talking to us about some of the challenges facing as the auto industry deals with, making that transition from ICE to electric vehicles. And then, of course, the problems of China as an export market. I mean, again, the VW news today, closing potentially 3 plants in Germany. You don't do that. They almost never do that, I think.
It's a big shift. And I think one of the things that's been interesting to follow, again, I'm a markets reporter by nature. So when you look at a company like Tesla trading at the highest level since last September, we saw it jump 22% last week.
Yep.
Who's going to win? Who's going to lose? And how does that all shake out is going to be fascinating to watch in the months and years ahead.
Yep, absolutely. We've got green on the screen here today. S&P 500's up 21 points. That's 0.4%. NASDAQ, that's up about 91 points. That's 0.5% as well. 10-year Treasury yielding right around 4.28%, so just about 3 basis points higher today. WTI crude oil, it's been the story of 5.6% today, under $68 a barrel. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, you're listening to Bloomberg Intelligence. Bailey Lipschultz sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. We're 8 days away from the election. And one aspect of the election we haven't really had to think about up until the most recent cycle or two is just ensuring that we have safe and secure elections. That is now a big deal, particularly with early voting and mail-in voting and all those things that came out of the pandemic. Somebody who does think about that is Rhett Buttle. He's the CEO of the Public-Private Strategies, joining us here via Zoom. So, Rhett, how are you thinking these elections are going to go next Tuesday, and then Wednesday, and then Thursday? What is your concern level that we will, in fact, have safe and secure elections?
Well, great to be with you. So first of all, I mean, America, as we know, over the last, set of election cycles has primarily had very safe and secure elections. And I think we're feeling confident about all of the elections to date. And many of the, state and local officials have worked very hard to prepare I think, one of the bigger questions is, we probably will not have the exact results of the election on election night. And so, it might be until Saturday or Sunday until we know an official winner. And so one of the pieces that we've been thinking a lot about is really making sure that folks are preparing for that they know that every vote is still being counted, and that the process might just take a while, but that is the important role of democracy, making sure every vote gets counted. And particularly for business owners, understanding that this sort of period of uncertainty is a really important moment for businesses to be able to, bring some calm to the market, to be able to say this is how democracy plays out, not just in the role that they play in the markets, but also in the role that they play as community leaders. For a lot of CEOs who have employees, this can be a fraught time, for example. And so it's really important to know that, every vote will be counted. The elections are on par to be very safe and secure, but we may have a period of uncertainty, and that's okay. And we just need to understand that might be the case, but it's an important part of letting democracy play out.
Well, Rhett, I think back to 2020 when it took a few days, but we were still in the midst of the pandemic. Now in 2024, people will be back into the office, back at work, back on subways here in New York and commuting around the country. How does that actually kind of impact a delayed ruling or a delayed decision on who in fact will win the election, especially as we see a number of contested seats across the House and Senate?
Yeah, look, we're so used to having everything, be so instantaneous. We're used to obviously having a result, called on election night. The reality is, at least for the national presidential election, we expect it to be very close. And there's a number of states that probably will take a few days to make sure that every ballot is counted. And so, unlike where we were all sort of huddled in our homes around Zoom screens or around TV screens before, we are going to have people going back into the office. And we know one of the things we learned in 2016 was that, elections can invoke a lot of emotions with employees and start a lot of conversation. And the reality is the workplace has become a really important square for civic engagement, right? It's one of the places where people interact, they talk to each other. And so it's become increasingly important that business leaders and CEOs think about the role they can play in sort of setting the tone, the role that they can play in sort of depoliticizing things and making sure that there's a safe space. We see in a lot of companies with employee resource groups that there's the opportunity to provide space for dialogue. And so part of the work that we've been doing under an initiative we created, it's called the Business and Democracy Initiative, is we've been working with business leaders to help them prepare for this election, to not only sort of raise their voice in their communities, to talk about how this is the normal part of democracy, but also to play an important role in sort of depolarizing, de-escalating, and making sure that everyone's voices are heard in this process over the next few weeks.
Rhett, and the business leaders that you do speak to, what is the concern level, if at all, that we have a recreation of something like January 6th to that level?
Look, I think overall people feel that the election is going to be safe and secure and that every vote is counted. So that is a good point. I think generally what I hear from business leaders is, increasingly, risk has become an issue with just instability. And so even beyond the elections, there's a broader issue with the government, for example, not being able to pass, funding bills that go on for years, or the debate over the debt ceiling, for example, and not being able to reach resolution. So there's that broader sort of risk level. America, as we all know, is the most important economy in the world. And so having that certainty is really important for business leaders. And I think over the last few years, businesses have become increasingly frustrated that the government hasn't been able to provide more stability, and that partisanship is continuing to sort of really, make it difficult for business leaders to make decisions, especially businesses who rely upon the government for, a wide variety of factors. So it's a broader sort of risk appetite rather than just in this moment, but it's definitely something that boardrooms and businesses are starting to look at.
All right, fascinating times, and we'll have election day 8 days, and then we'll have to see how many days after that it takes to get a declared winner and loser. Rhett Buttle, he's the CEO of the Public-Private Strategies. That's the name of the firm there. And again, 8 days away, so we'll have to see here. I'm looking at the markets here, though. We're going to get some earnings this week from a lot of the big tech companies, the Magnificent Seven. We're going to get 5 of those names, so there'll be a lot to chew on for the remainder of the week. And I think that's what's going to come into focus. We'll have a jobs report coming out on Friday, another data point for the marketplace and for the Federal Reserve. So a lot for the market to digest.
Especially ahead of, as you mentioned, the election. It's seemingly interesting when the companies that have been driving so much of the spending and benefiting the NVIDIAs of the world, you're talking Meta, Apple, Amazon, they all report this week, and that'll provide another peek into how corporate America is performing, again, ahead of what will be a critical election on Tuesday.
Absolutely. It'll be interesting to see how companies voice their guidance right ahead of the election as well. How much confidence do they have in their guidance, which is what investors key on as well. Coming up, balance of power. Joe Matthews down in Washington, D.C. I'm thinking his days are getting just incrementally more and more busy the closer we get to Election Day. Makes his program even more important, I think, for our viewers and listeners. Balance of Power with Joe Matthew, Washington, D.C. That starts right now.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kaif, and reaction's been sharp to some of what was said before Donald Trump took the stage at his New York City rally yesterday.
Many Puerto Ricans are feeling immensely outraged.
One speaker suggested Puerto Rico was a floating island of garbage. That's Ketsi Lozada, a Democrat on the Philadelphia City Council. Reaction from Vice President Harris.
He is focused and actually fixated on his grievances, on himself, and on dividing our country.
CBS's Libby Cathy is with the Trump campaign.
Sources on the campaign telling CBS News internally there's a lot of irritation that this seems to have upstaged what was supposed to be the former president's homecoming and the start of his closing arguments to his campaign. Instead, everyone is talking about Tony Hinchcliffe. And while the campaign is trying to distance themselves from this, Vice President Kamala Harris's campaign, meanwhile, is taking this as a gift.
CBS's Ed O'Keefe is covering the Harris campaign.
Tonight here in Michigan, Harris holds her first rally with running mate Tim Walz since their August convention. And tomorrow night in Washington, she's set to give what her campaign calls her final closing argument on the ellipse in Washington, with thousands of supporters expected. That is, of course, the same spot where former President Donald Trump spoke just hours before the January 6, 2021 insurrection at the Capitol.
And in Delaware, right now, President Biden is casting his votes. Virginia has asked the Supreme Court to allow the state to remove about 1,600 voters from its rolls that it believes are non-citizens. The appeal comes after a court upheld a federal judge's order restoring the registrations. Well, CBS's Jim Krasula has the story today of a neighborhood dispute that led to gunfire.
A Minneapolis man identified as John Solchak has been arrested and charged with shooting his neighbor over a property dispute involving the trimming of a tree. Solchak holed up in his house for several days. Minneapolis Police Chief Brian O'Hara.
There was extensive work by our officers to try and make contact, to try and bring this person into custody.
Davis Montori is in stable condition after being shot in the neck. Police say Montori had filed at least 19 complaints to them about his neighbor in recent years.
Well, some newer iPhones and iPads are eligible for an artificial intelligence upgrade beginning today. Bridget Carey is editor-at-large at CNET.
They are working with having ChatGPT kind of put into the phone, but that's later. Being able to make your own images later. So Apple's really taking this approach of going, let's make baby steps. Let's do it right.
And checking Wall Street, right now the Dow is up 222 points. The S&P is up 16. This is CBS News.
Progressive Insurance. What do your home and auto have in common? They're yours, and Progressive protects them both. Bundle today at Progressive.
Politics to the world of business. This is Balance of Power. D.C.
It's the last big push. Welcome to the fastest show in politics as the campaigns gear up for the final week of this race, with rhetoric reaching a fever pitch and no break in the polls. To that end, we go to school this hour with Don Levy, director of the Siena College Research Institute, out with new numbers on not only the presidential campaign, but critical Senate races that will help decide the balance of power here in Washington next month. Israel responds to Iran with airstrikes. We'll talk with Bloomberg's Ian Marlowe here in Washington about the attack, 3 weeks now in the making, and whether that is the end of the tit for tat. We're still recovering from Madison Square Garden. How about you? We'll have analysis today from our signature panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. They're with us for the hour, and it all follows a look at Wall Street to set the baseline. Here's Amy Morris with the latest on the markets. Hi, Amy.
Hi, Joe. Volkswagen plans to close at least 3 factories in Germany. It's Europe's biggest automaker, trying to slash expenses to become more competitive. The company plans to downsize all remaining sites, putting tens of thousands of jobs at Volkswagen in Germany at risk. Volkswagen shares about 0.5% higher now, and we expect to get earnings from Volkswagen on Wednesday. Boeing shares little changed at this hour after the plane maker launched a nearly $19 billion share sale to address liquidity needs and prevent a potential credit rating downgrade. The funds will help Boeing maintain its investment-grade rating and fund production ramp-up ones as the strike ends. Boeing shares are down now 0.5%. And futures climb and oil sinks. Pivotal week today, starting today rather, packed with key economic data and corporate earnings. Among those are the results for 5 of the Magnificent 7 big tech companies, economic growth prints for the U.S. and Eurozone. We're also going to get the monthly payrolls report, and next week, of course, the presidential election. We checked markets for you all day long here at Bloomberg. The S&P 500 is up 18 points, NASDAQ up 80 points, the Dow up 227 points, the Russell 2000 index up 32 points. The 10-year Treasury yield now at 4.28%, the 2-year yield at 4.14%. We told you about oil sinking. NYMEX crude oil now down almost 5.5%, now at 5.45% lower. That's at $67.88 a barrel. And looking at Brent crude, it is now down 5.3 cents, or rather 5.3%, now at $72.03 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Welcome to the Monday edition of Balance of Power, the fastest show in politics, live from Washington here on Bloomberg Radio, on the satellite, and on YouTube, where you can find us right now. Search Bloomberg Business News Live. As we crawl out of another weekend here on the campaign trail and aim for this is it, gang, the final week of this campaign. Kamala Harris on her way to Michigan today, of course, arguably one of the most important battleground states on the 7 swing states that we're looking at here on the map. She'll be talking about manufacturing jobs, going to a Corning facility. Going to be doing something with Maggie Rogers later on. Donald Trump is in Atlanta, onto the swing state of Georgia, following his performance last evening at Madison Square Garden. This was a 5+ hour rally. That included a lot more than Donald Trump. And if you scan the headlines today, they're all pretty consistent because, well, what it was before Donald Trump ever hit the stage was some of the most heated and off-color rhetoric that we have heard in this campaign so far. New levels in attempts at comedy that ended with crude, sexist, and racist jokes that spawned a lot of reaction from Republicans as well as Democrats, particularly those in swing districts. We heard just a few moments ago from Kamala Harris, who was asked about some of the language at Madison Square Garden and the messaging from the Trump campaign. She's on the tarmac on the way to Michigan, as I mentioned. Here's what she said.
This is not new about him, by the way. What he did last night is not a discovery. It is just more of the same and maybe more vivid than usual. Donald Trump spends full time trying to have Americans point their finger at each other. Fans the fuel of hate and division, and that's why people are exhausted with him.
And so this is the closing argument, right? This is part of the message from the Trump campaign, even though it is also out with some ads that are being very well reviewed, by the way, from politicos on both sides of the aisle for their perceived effectiveness on the economy, on the Biden-Harris record. Last evening, though, we were telling jokes you probably wouldn't be able to tell at the Thanksgiving table when the family gets together next month. Now, we have seen the final drop from Siena in the New York Times. Our friend Don Levy, who's been with us for many months, tracking their polling and coming up with a very similar result to the Bloomberg swing state poll. When you look at the presidential level, ours was 49-49. His is 48-48. And new numbers today as well on some House races that we're watching specifically in New York, also a couple of Senate races that could throw wild cards into the final analysis. They certainly are into the walk-up. Don Levy is director of the Siena College Research Institute. And with us 1 week out, Don, it's great to see you. Thank you so much for joining us today, as always, on Bloomberg. If I could just start with the presidential, knowing that a lot of people are voting right now. Michigan has statewide early voting underway as of Saturday. You wonder if the rhetoric, like we're hearing right now, Madison Square Garden last night on the ellipse from Kamala Harris tomorrow, poses having any impact on this race at all, or if people's decisions have been made.
Well, certainly we're at 48-48. It can't get any closer than that. Still, there remain about 10% of Americans who say they are persuadable, who say they might change their mind. And clearly the issue of democracy is one that both campaigns are trying to make a point on. If you look at our most recent national poll, you see that more voters seem to be a little bit concerned about the effect that Donald Trump might have on our democratic institutions than Kamala Harris. In fact, we saw that 58% feel as though Trump worsens the partisan divide. Only 37% feel the same way towards Harris. And interestingly, when we asked about, do you take Trump seriously? Now, overall, Americans are about split, 48-46, whether they tend to take him seriously. But where they do take him seriously, large majorities say they take Donald Trump seriously when it comes to him using the DOJ, to prosecute his political opponents. And more than 2/3 of Americans take Donald Trump seriously when it comes to the possibility that there would be mass deportations of 11 million current illegal immigrants who are here in the United States. So the rhetoric, the partisan divide still could weigh on that 10% who has yet not carved their vote in granite.
There was a really interesting number in your poll about the economy, Don. Donald Trump had a 13-point edge over Harris on who is better suited to handle the economy broadly. 1 month ago, that has shrunk to 6 percentage points. If you're looking at momentum, does that factor in to what might happen a week from tomorrow?
Well, you've got to feel that the Harris campaign feels that way. This is a significant drop. I mean, Trump has been running at double digits as more trusted on the economy for a long time. You know, go all the way back a year ago when it was Trump versus Biden. So to see that number drop to 7 points is significant movement. Still, when voters say, what's the most important thing to you? Overwhelmingly, they say the economy, the cost of living. So Trump continues to hold a lead there. Where does Harris hold the lead? And that one hasn't moved. The issue of abortion, she's got about a 14, 15-point advantage on that issue. But if it comes right down to the economy, that 7-point lead for Trump is a significant margin.
Joe Biden is voting early today. Producer James says he's in line in Wilmington. He was set to do this at 11. He's in line, the president of the United States, James? He's just waiting in line. That's a long line. Is everybody with him? He's got the Secret Service with him in line, Don. I feel like he should have just listened to the show, maybe gone a little later. Let the lines die down. The early voting part of this campaign is part of the story. Don, do you actually kind of look at where your polling was as each state opened to maybe create a little curve in your own mind about the way this is impacting things as you get these snapshots along the way? People are making their decisions.
Yeah, absolutely. I mean, we certainly asked voters whether they have already voted. It seems as though, while not yet at pandemic levels, that we're seeing a tremendous amount of voters who are telling us, I've already voted. Still, right now, we're asking them, who did you vote for? Who are you going to vote for? So right now, we concentrate on what the voters tell us. And clearly, we're moving now from the national polls, and we'll do our final round of battleground states over this week, and be happy to jump on with you a week from today when we're going to have fresh polls in the 7 key battleground states.
Oh, that's a date. Let's plan for that. I guess I'd love to get your long view here, Don. You've been at this for months and months, watching these numbers move a bit, but not a lot. You've gone through a change at the top of one of the tickets here. So much wild rhetoric that we've heard, attempted assassinations, yet the consistency in this race as a tie is remarkable. What do you make of it?
I've never seen one that is tied like this, coming right into the final stretch. But when you look under the hood, we are a divided nation. Men tend to be for Trump, women for Harris. If you look at voters, for example, white voters without a college education, overwhelmingly for Trump. If you look at the black vote, a lot was made early in the campaign about some erosion, most especially amongst young black men, away from the Democratic side of the ticket. That seems to have returned. Hispanics, very much in play, a small margin for Harris. So really it's going to come down to these subgroups and who turns out at rates greater or less than what they have historically turned out. That is where the difference could lie, most especially in, I think, we want to look very carefully at all 7 battleground states, but most specifically at the 3 northern ones where we have all those groups of people well represented, and a small change in turnout amongst, for example, black voters in the urban centers, or white non-college educated voters, which, certainly with a 30 to 35 point advantage for Trump, are key to his campaign in states like Pennsylvania, Michigan, and Wisconsin. So it's going to come down to turnout. I think the polls coalescing on very similar numbers have done a good job of capturing the national mood. And now really it's going to come down to which of these subgroups turn out at rates greater than they have historically turned out.
I've got to ask you about these 2 Senate races, Nebraska and Texas. We didn't think we'd be talking about them here in the 11th hour, but they've become awfully interesting. Your polling confirms what a lot of people have thought. Dan Osborne, the independent, is within striking distance of Senator Deb Fischer. In Texas, Colin Allred has a real race here against Ted Cruz. I've only got a minute left here, Don. Either of these 2 happen, it changes the balance of power in the Senate, correct?
Oh, absolutely. These are key Senate races. The one in Nebraska came out of nowhere. Of course, the challenger there, Osborne, is an independent. He hasn't as yet said who he would caucus with, but he's within 2 points. And he is drastically overperforming where Kamala Harris is in that state. So voters are making a real difference between Harris, the Democrat, and Osborne, the independent. So that one is razor thin right now. And we all know that the 2nd congressional district in Nebraska is key. Osborne's way up there. Harris is up there, that 1 electoral vote. As far as Texas...
And you've got a 4-point race in Texas. Don, come back and see us. I think we have a date, a week from today, right? Or a week from tomorrow. James will follow up with you. I'm Joe Matthew in Washington. Thanks for being with us on Balance of Power. We'll turn our attention to the Middle East next on Bloomberg.
12:21 on Wall Street. I'm Amy Morris. Markets are higher. Oil is sliding. We're launching into a busy week for eco data and corporate earnings, and we check markets for you all day long here at Bloomberg. The S&P 500 is up 25 points. NASDAQ up 104 points. The Dow up 295 points. The 10-year Treasury yield at 4.28% and the 2-year yield at 4.14%. NYMEX crude oil down 5.5% or $67.78 per barrel, and Brent crude down 5.4% or $71.93 a barrel. Volkswagen plans to close at least 3 factories, eliminating thousands of jobs, slashing wages for tens of thousands of workers as Europe's biggest automaker tries to halt a tailspin. VW's employees are worried the cuts are just the beginning of plans to downsize the car maker's operations in Germany, which is struggling with relatively high energy and personnel costs. Shares of Volkswagen down right now about 1%. Boeing launched a nearly $19 billion share sale, one of the largest ever by a public company, to address the troubled plane maker's liquidity needs and stave off a potential credit rating downgrade to junk. Shares of Boeing down about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Amy, thank you so much. As we watch what's happening in the Middle East, there's so many cross currents today in the news. It's easy to forget some of the important stuff, and that's what we're keeping our attention trained on here on Balance of Power. With so much noise on the campaign trail, there are important headlines that are actually impacting policy and a lot of people around the world. With a little bit of an update here on discussions over a possible, and I want to be careful with this hostage deal involving Israel here. Mossad chief returns from meeting with the head of the CIA, Prime Minister of Qatar in Doha. Israeli Prime Minister Benjamin Netanyahu's office says this following, of course, Israel's response, if we can call it that, to Iran over the weekend. Isolated attacks that did not target oil infrastructure or the nuclear weapons program, and that is partly why, as Amy Morris has been telling us, oil prices are down sharply today. WTI crude off a cliff, down almost 6% in the futures market right now, with a lot of folks thinking that, well, this could be it, the end of the tit for tat, and maybe a new opportunity for negotiations. Bloomberg's Ian Marlowe covers State Department diplomacy and geopolitics for us here at Bloomberg. Is with us now at the table. Ian, it's good to see you. The question, I guess, that everyone is asking or betting on in the case of the market, is that it?
Yeah, it's one that we're all asking as well. I think if you looked at the Israeli response, late Friday, it really did seem like something that was influenced by the U.S. Sort of diplomacy and lobbying to keep this restricted, keep it away from oil and nuclear infrastructure, keep it to military targets as opposed to civilian targets. And it looks like that's what happened. And there were some, rumors in the heat of everything going off that this wasn't the end of it and that Israel was going to, continue striking over the weekend. Right. Didn't look like that's what happened. So at the moment, the response from Iran, and we've seen a few kind of comments coming out that, the Iranian response will correspond with what the Israeli response was. But I think at the moment, everyone's just sort of hoping that this tit for tat has ended.
Yeah, you get the sense that maybe the Biden administration had some influence on the outcome here, or is this actually what Benjamin Netanyahu wanted?
It's hard to say because Netanyahu has gone, overboard and on several occasions and been willing to, accept more risk than the U.S. Has been willing to from the very beginning. Yeah. And the campaign in Lebanon that's now ongoing is a perfect example of that. For most of the last year, the U.S. was telling Israel not to go into Lebanon. Mm-hmm. Then they killed the head of Hezbollah and then went in on the ground anyway. So, he's been willing to defy them on certain things, and then he sort of comes along with the U.S. position on other things. And so this may be one of those occasions where you see a little bit of the leverage that the U.S. still has on this government in Israel.
Israelis used Iraqi airspace to send the fighter jets to their final destinations here, and in fact struck targets in Iraq and Syria, anti-aircraft targets. How significant is that? Does it create a problem diplomatically for Israel to have not asked permission?
I don't think so, just in the sense that Israel has been going, they've been bombing targets in Syria. The U.S. has been hitting targets in Iraq and Syria. Yeah, I'm not sure it really moves the needle too much. I think the thing that we should all be looking at right now is just, the proportionality of the Israeli response. You know, everyone, I think, not everyone, a lot of people remember seeing that footage of all the Iranian missiles coming out, you know, shooting through the sky, seeing them shot down, everything. That was quite dramatic. This Israeli response does not seem as dramatic on the face of it, and it seems to be limited to, should say, these, you know, sort of missile building facilities, air defense, and missile launcher sites. So it's targeting precisely what shot all those, you know, ballistic missiles at Israel before. So it seems to be directly related and not escalatory in a way.
Sure. I don't know if you're taking seriously talk of diplomacy now, but there are some developments, and we've got some new reporting. Benjamin Netanyahu says he is open to a short truce in the war with Hamas to allow the release of a small number of around 100 hostages. I believe Israel first put this forward. It would be a 2-day truce for 4, if I remember correctly, Israeli hostages. Does it stand a chance?
Yeah, I'm not sure. We'll have to see. I mean, there's a lot of, there's been talk over the last few months of some sort of limited, more restricted deal. I think the U.S. has long been hopeful that getting Hamas and Israel into any sort of like cessation of hostilities, whether it's for an agreed upon week. And I remember back in November, we had this, you know, the original truce, and it seems very far away now, but when hostages were being released and people were hoping that might be extended, it didn't. There's hope on the U.S. side that something like that could happen again, and that people are so weary of conflict that even the shortest sort of truce could be extended once people see that, you know, this is something that's possible.
It is kind of amazing to think a 2-day truce would be considered a major development. Did Anthony Blinken's trip make a difference?
It was the 11th trip. I've been on 5 of them. My colleague Courtney's been on the rest. It's sort of marginal gains. I think they were trying to seize the opportunity presented by Yahya Sinwar's, you know, killing by Israel the other week, and but it's not clear exactly where we are now, because before the Lebanon conflict, you know, that Israel expanded, the killing of Sinwar might have led to a real end to the whole thing. And at the moment, we have this other conflict in Lebanon simmering. There's the Israel-Iran conflict that we're still kind of awaiting to see whether it ends. And the Hamas conflict has continued to be messy and tragic, and also with these developments in northern Gaza, where, you know, essentially it's sort of almost a siege around this hospital and everything. There's been really dire warnings from the humanitarian community there. So even though Blinken has pressured them on humanitarian access and all these things on the previous 10 trips, they're still running up against some of the core same problems, right? So.
Wow. We've still got a lot to figure out here. If there is a 12th trip, he'll be on it. Ian Marlowe, many thanks, as always, Ian, for being with us, reporting from Washington for Bloomberg on our national security and diplomacy team. I'm Joe Matthew in the nation's capital as we add the voice of an expert on the energy side of this story. Mike McGlone does this for a living at Bloomberg Intelligence, where he is senior commodity strategist. Mike, thank you so much for joining. We wanted to spend 5 minutes with you just to get a better sense of what was happening below the surface here. I'm struck by the size of the risk premium, or the war premium, whatever we should call it here, that was baked into crude. Are you surprised to see it down this much today?
No, Joe, I'm not. It's one of those things. The market was just waiting for an excuse to do what it normally does this time of year. It's usually the worst time of year for crude oil. That's October and November. Last year was down, I think, 12% in both of those months. But you mentioned the key thing is the lack of supply disruptions in the Middle East is the key thing that's been happening. We've had geopolitical tensions keeping prices bid, but what that's done is it's extended the excess of supply of the U.S. and Canada. At the same time, we see declining demand for imports out of China and declining demand for diesel, the grease of the global economy in the U.S., Europe, and in China. So the situation for crude oil is quite bearish, and it's not unique. It's very much also on the back of natural gas and iron ore and the grains. It's all most commodities, and crude oil is just catching up.
Okay, interesting. It's bearing out in the stocks as well. You've got the XLE down almost 1%. Exxon is down. You've got Exxon and Chevron reporting earnings at the end of this week. How worried should investors be in names like these as we head for winter?
They should expect more pressure lower. Now, one thing that typically happens this year, time of year of natural gas gets a little bit as we get into the winter heating season. But the bottom line, from my standpoint, the underlying commodity markets, you should expect the average price of gasoline in this country is still above $3 to drop below $3, maybe get to $2.70. The average price of diesel, which is around $3.50, to drop below $3, maybe get to $2.50. So that's good for consumers. But overall, it's good news. Is the reason that's happening is partly because the U.S., we do export now almost 2 million barrels of crude oil and liquid fuel. And we have to, because just a few years ago, we were a net importer because we create so much of it and we use less of it. So it's just a good trend for consumers, but it's a bad trend for actual prices in the commodities.
Last 3 times I filled the tank was under $3 in Northern Virginia. I'm looking at AAA, $3.13 nationally, the average. You're talking about $2.70 potentially. I didn't bring you on to talk about politics. Well, maybe a touch of geopolitics here, Mike, but this is all really good news for the Biden administration and for Kamala Harris. The timing here is remarkable. What will the average be a week from today when people are lining up to vote?
There you go. It's such a unique situation. In market, people are calling it the Trump trade, which is somewhat pressuring crude oil prices because of the drill at will mantra. Yes. But as you pointed out, that might be actually helping the quasi-incumbents, the incumbent party. But the bottom line is it's just typically what happens with gasoline when it gets that expensive or diesel gets that expensive. But what's really happened, the big difference the last time we had a pump like this was in 2008, is the U.S. was a net importer. Now we're an excessive net exporter. I'll put this end with this. With Canada, liquid fuels and crude oil, we're a net exporter of almost 6 million barrels a day, which is about what the OPEC spare capacity has been rising to. So you see those trends, declining demand, increasing supply.
This is fascinating. So, you know, I'm guessing the oil industry, you can tell me if I'm wrong, would prefer to see a Trump victory. But, you know, it's also our job to remind everybody that we're at record production right now. How do you rationalize those two?
Exactly. Well, that's why I like to point out the big shale revolution happened during the Obama administration. It's never underestimate U.S. technology and you know, the incentive produced when they can. So, but I look at it as the bottom line. Bloomberg New Energy Finance calculates the average cost of production for WTI crude oil, barrel crude oil in this country is about $56 a barrel. So basically, you probably have to get below that level to really offset the excess of supply versus demand. In the meantime, expect U.S. producers to continue to make money and produce more.
Wow, fascinating. Where do we end the year with crude oil?
Lower. Question is how much lower? So one thing about Joe, I feel less comfortable now. Because I'm kind of more in a consensus. 2 years ago when I was pointing out these trends, I was way out of the consensus. But I think it's just a matter of time that crude oil gets to $40 a barrel, and I think you're probably going to see a 50 handle this year, maybe at least $59.
So $40 a barrel. Fascinating. Mike, don't be a stranger. Thank you so much for helping us out here as we round the bend on our story from the Middle East, the market reaction that you'll only hear about on Bloomberg. Mike McGlone, Bloomberg Intelligence. We'll assemble our panel next. They're both with us. Rick Davis and Gidi Shanzano on the way on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Former President Donald Trump's social media startup is extending a 5-week surge that has pushed the stock up by some 272% from a September 26th low. As retail traders tout the shares, the stock jumped as much as 17% today to the highest since July 15th. And now shares of DJT Media at this hour are 19% higher. BNP Paribas let go at least a half dozen employees in New York last week, including its head of U.S. high-yield trading, David Malvern. Sources tell Bloomberg 2 investment-grade credit traders were also let go, plus 2 sales employees. The exits come after BNP dismissed 6 members of the emerging markets team this month. Shares of BNP Paribas about 1% higher. McDonald's shares are 1.5% higher, the company putting Quarter Pounders back on the menu after ruling out the beef patties as the source for a multi-state E. coli outbreak that left 1 person dead and sickened dozens of others. The infections appear to be linked to the slivered onions served on Quarter Pounders, so those burgers will return to the menu without the onions. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.3%. NASDAQ up 0.4%. The Dow up 0.6%. The 10-year Treasury yield at 4.29%. And the 2-year yield at 4.14%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
Amy Morris, thank you so much. As always, watching Wall Street for us here on the fastest show in politics. Thank you for starting your week with us here on the Monday edition of Balance of Power as we clear out the cobwebs from another wild weekend on the campaign trail. How do we unpack this one? Did you spend the 3 hours with Joe Rogan and Donald Trump on Saturday morning? Did you spend the 6 hours? It was almost 6, right? Watching this thing at Madison Square Garden. Everyone keeps asking me how the weekend was. I don't know. I was watching the campaign all weekend. I heard there was a football game last night. Interesting to see all of the coverage coming out of Madison Square Garden reach for the same words. Crude, racist, sexist. Rage, I think, was used by Axios here. Which broke it down along with Politico, if you didn't get a chance to see it. Donald Trump came on late. This was hours of other people talking. And yes, you've heard of some of them, Don Jr., Tucker Carlson, even the Speaker of the House, Mike Johnson, was there, called Kamala Harris a Marxist. But radio host Sid Rosenberg helped to get the crowd wound up. Called Democrats a bunch of degenerates, lowlifes, and Jew haters. David Rem called Kamala Harris the Antichrist. This is a packed house, right? Madison Square Garden was full. Who's this? Yeah. Oh, yeah. Grant Cardone said Harris, referring to her pimp handlers, will destroy the country. Tony Hinchcliffe, though, won the night, the comedian, most of whose jokes I cannot read here. This was the whole Puerto Rican joke that you've actually been hearing in our newscasts. We just actually heard David Gora talking about that, talking about a constituency that Republicans and Democrats both need to win. I don't need to go on here. It was like Thanksgiving dinner with the crazy uncles and people heading for the exits. We've heard from quite a number of Republicans. Rick Scott, senator from Florida, not funny, not true. Representative Maria Elvira Salazar, disgusted, does not reflect GOP values. Anthony D'Esposito, New York, right? Republican congressman who may well lose next week. His mother was born and raised in Puerto Rico, asking Trump world to stay on message. It does make you wonder where we're going here with the closing arguments with a week to go, and that's why we have our panel with us. Rick Davis and Jeannie Shanzano are both here. Jeannie, of course, Bloomberg politics contributor, Democratic analyst, political science professor at Iona University. Rick Davis, Republican strategist, partner at Stone Court Capital. Great to see you both here. Guys, I'm sorry I'm starting with the Looney Tunes, but my goodness, a lot of people are still trying to recover from what they saw and heard last night. It brings us back to the whole idea of a say it out loud campaign. Jeannie, we just heard from Kamala Harris responding to this as we played for you at the top of the hour. She basically says it's more of the same when it comes to Donald Trump. This is not new about him. It's what he did last night. More of the same. maybe more vivid than usual. What did you make of what you heard in New York last evening, Jeannie?
Well, I'm going to add another word to your list, Joe. Vile is the word that comes to mind, and it adds to all the other ones that you put in. I think it makes for a horrific campaign ad for the Harris team, which is, do you really want another 4 years of this? And just play what was going on there from start to finish. Oddly, mostly from the start, because these were mostly speakers before Donald Trump. It was misogyny, it was racism, it was sexism, it was people howling with laughter. And to your point, you can't read much of it in front of anybody proper. You can't let your kids hear it. And this comes, as we find out from the Washington Post today, that the #1 t-shirt selling at these Trump rallies is one that calls Kamala Harris a hoe. I mean, this is what we have gotten to at these rallies. And I think what's most astonishing is the very lukewarm way in which the Trump campaign has tried to separate itself from this rhetoric in the hours afterwards. And the fact that you do have Republicans, as you mentioned, coming out against this. That shows you how serious it is, because even Rick Scott and Salazar and others know this is bad politically for them. But beyond that, it is vile. It's racist, sexist, and everything else.
Well, enter Bad Bunny to remind us that actually sometimes what is said matters. A lot of these events, everybody shows up on Monday and they're freaked out and outraged, and the headlines saying the race is over and all that. And you know what? By Tuesday, everyone's forgotten and everybody's moved on. Every now and then, though, some things stick. This is the deemed Puerto Rican mega rapper in the write-ups this morning shared Harris's plan that she was putting forth yesterday, new policies to help the U.S. territory, in a full-on endorsement after the so-called island of garbage joke, talking about Puerto Rico. Rick, we heard from the Trump campaign. This is something, actually putting out a statement to condemn the rhetoric that happened at its own event. This is Danielle Alvarez, senior advisor. Quote, "This joke does not reflect the views of President Trump or the campaign," unquote. You've run a lot of presidential campaign events, Rick. They're saying that these people were not vetted by the campaign, yet they were hired by the campaign, right? How do we put this all together?
Well, it is good to know, to add to many titles I've been given throughout my life, that I am now a pimp handler as a former campaign manager. I'd be interested to see what the reunion is going to look like with that crowd. But you own it. You bought that. You bought that arena. You put everybody in it. It's the responsibility of the campaign, and everything that's said and done there is a reflection of the campaign. You invited people to come and speak. You may not have vetted all their remarks. You can't always, control what people say off the cuff, but it is yours. You own it. And the idea that this is the only thing, as described by Jeannie, a mass amount of invectives, horrible language, and slurs, and that this is the only thing that has caught the eye of the Trump campaign to apologize for, is kind of shocking. I mean, when you think about it, what other people said is getting a lot more press than what Donald Trump said, and Donald Trump said enough to really upset you. But that's been his closing argument. So at the end of the day, you own that arena, you own what happened in it. And it's just amazing that Kamala Harris just happened to be doing a outreach to Puerto Rican voters in Philadelphia area, the third largest Puerto Rico group in the United States. At the same time all this happened. I mean, you honestly could not have drawn more attention to it than having that sort of consequence of those two events going off on the same time, basically.
Rick is right. Kamala Harris was in Philadelphia reaching out to the 300,000 Puerto Ricans in the swing state, visited a restaurant, rolled out the new policies that I mentioned, Bad Bunny shared on social media. Jeannie, there's something else that happened beyond the crude jokes. And by the way, Rick is right. This island, the garbage island line, that's the only one I can say on the air. There were a lot of off-color jokes that I'd get fired if I read right now. But the stuff that Donald Trump said himself, not the comedian, but Donald Trump talking about Speaker Mike Johnson, This is a riot. Quote, I think with our little secret, we're going to do really well with the House, right? He said. He and I have a secret, he went on to explain. We'll tell you what it is when the race is over. Now, knowing the concerns surrounding January 6th and the role that Mike Johnson played in supporting this idea of a rigged election and stopping the steal in 2020, Jeannie, what was Donald Trump talking about there?
I think he is dog whistling again to say that if he loses this election, and it's very likely he could, that he has some kind of secret agreement with the current Speaker of the House. We do need Congress to certify these electoral votes. That's a very scary reference, and I'm glad you said that because it's been completely overshadowed by the, vile language that came before it. And, of course, another thing Donald Trump said was just a few minutes after J.D. Vance was on CNN with Jake Tapper doing backflips, trying to explain, oh no, when he says the enemy within, he doesn't mean Americans, he means blah, blah. He's trying to explain that away and make it more kosher for everybody. Donald Trump gets up on that stage and says, no, I meant exactly what I said. I'm going to use the power of the federal government if I become president to exact my retribution on people who have opposed me. And you find that there are a lot of people out there for whom this is deeply concerning. I mean, just look at the LA Times and the Washington Post, those billionaire owners saying, you know what? It's not in my business interest to endorse Kamala Harris at this point because it is likely, at least there's a 50% chance that this man who has promised to exact retribution could win the presidency. So if people think that he is just talking, nonsense, the weave, as he calls it, no, he means what he says, and he will do it.
The weave, I got to tell you, I mean, the fact that we're not even talking about the Joe Rogan thing, I can't even, it's incredible how quick the news cycle is turning over. 3 hours with Rogan on Saturday, it may as well have been a year ago. You fast forward to Madison Square Garden, okay, guess what? We're on the ellipse tomorrow with Kamala Harris. All the rest of that will be in the past as well. And I want to ask you about that, Rick, because we're talking about Donald Trump's muddled closing argument, as critics would say. Some are also accusing Kamala Harris of muddling the closing argument, going to the ellipse tomorrow for what is in fact being called a closing argument address. That's going to take place here in Washington, not in a swing state, and she's going to try to remind everybody of the way they felt and what happened, of course, in the events surrounding January 6th. Is that also wasted time for the Democratic nominee?
Well, it's the time she's choosing to close on. And I would remind everybody, it was only 2 months ago where the theme of the campaign was joy. She was going to be the positive candidate in this campaign, knowing that Donald Trump would want to paint the country in disarray and fading, and that only through his leadership could it be brought back. And so somewhere along the way, joy got thrown in the ditch, and she basically took up the same tools that Donald Trump's employing, which is to describe a very drastic situation with Donald Trump as president, where democracy ends, political opponents are jailed. I mean, there's a battle for the dark. And right now, I would say, as you described, Donald Trump has dominated the airwaves, even though you can't actually believe that it was only Friday that the Joe Rogan 3-hour interview where he admitted to losing the election for the first time in a long time. That was like yesterday's news, but he has dominated him 3 hours that day, 6 hours on Sunday. I mean, I think the Harris campaign is doing a lot of activity, but they are being blown away by Donald Trump owning the media right now. And he's doing it on his terms in a way, as you described, where most of the really bad stuff we can't even talk about.
Flooding the zone, I think they would say, Jeannie. We've got less than a minute here, 30 seconds. We're going to be talking a lot about January 6th tomorrow. That means we're not talking about Kamala Harris's economic proposals, right?
That's right. I mean, to Rick's point, both of these campaigns are going out on a note of, hey, you may not love me and may not want to get out there for me, but you've got to be scared of that other guy who's running. So that's what we're hearing. I mean, these are very, very dark messages. And the closing, I have to say, Joe, I did listen to Joe Rogan.
It was 3 hours. Yeah. It was not bad, but it all got completely derailed by MAGA at MSG.
Right. He did actually say he lost the race there for 1 second, then he corrected himself. Rick is right. Yeah, 3-hour affair. We'll never get that time back, Rick and Jeannie, but they will be back with us in our second hour, so stay with us on the fastest show in politics on Bloomberg.
Welcome to the We Robot Party. So we have quite a show for you tonight. I think you're gonna like it. As you can see, I just arrived in the robotaxi, the cybercab, and there's 20 more where that came from. So they've been traveling. There's no people in them, as you can see. The car's just going by with no people. And we have 50 fully autonomous cars here tonight. So you'll see Model Ys and the cybercab, all driverless. You'll be able to take a ride in the cybercab. There's no steering wheel or pedals. So I hope this goes well. We'll find out.
Another wild weekend on the trail. Welcome to the fastest show in politics as the campaigns try for closing arguments now with 8 days left in the race. I'm Joe Matthew alongside Kaylee Lines in Washington. Welcome to the Monday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, a lot of us are still recovering from Madison Square Garden last evening.
Yeah, it was quite an event in the middle of Manhattan where actually some policy news was made. Donald Trump floating another tax credit for those who are caregiving for members of their family. Elon Musk also saying he could cut $2 trillion in federal spending if he runs the Government Efficiency Commission. But that was kind of overshadowed by some of the sexist, racist, and in general off-color remarks that captured the headlines, not necessarily from the former president himself, but from others who were chosen to speak.
Yeah, it was about a 6-hour affair, and a number of comedians and others spoke before the former president, the campaign even condemning some of the jokes that were told, at least one of them, about the U.S. territory of Puerto Rico that happens to be home to a pretty important, obviously, group of voters here that both campaigns are trying to reach. This happened, of course, while Kamala Harris was appealing to Latino voters at events throughout the day in Philadelphia. So the timing was something, but we're not stopping down there. We're going straight back to swing states today in a closing argument speech from the Ellipse tomorrow from Kamala Harris, with some important voices to join us this hour, Kaylee.
Yeah, we're really looking forward to speaking with former Senator and New York Knicks great Bill Bradley, who will be with us in just a moment after we get the latest from Bloomberg's Mike Dorning on where the campaign is today. But we begin, as always, with a check on the markets, and Amy Morris has a look from here in Washington. Hey, Amy.
All right, thank you, Kaylee. Stocks are higher and oil is lower. And we do check markets for you all day long here at Bloomberg. The S&P 500 now up 21 points. NASDAQ up 85 points and the Dow up 273 points. The Russell 2000 index is up 36 points and the 10-year Treasury yield is at 4.28%. The 2-year yield at 4.14%. NYMEX crude oil is down 5.8% now at $67.56 a barrel. Brent crude is down 5.7% or $71.67 a barrel. Apple started rolling out its first set of Apple Intelligence features and introduced a new 24-inch iMac desktop with a faster AI-focused M4 processor. The company says its Apple Intelligence software is now available for the iPhone, the iPad, and the Mac. Though Apple previewed a broader set of AI-related capabilities in June, the initial features represent just a sliver of Apple's plans for the service. Shares of Apple now 1.2% higher. Meta is reportedly developing an AI search engine. The Information reports the owner of Facebook is working on a technology to provide conversational answers to people using its Meta AI chatbot. The efforts show the lengths to which Meta CEO Mark Zuckerberg is going to go to reduce Meta's need for other major technology providers like Google or Microsoft. Shares of Meta up a little less than 1% at this hour. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines alongside Joe Matthew. Back in Washington, at least for me, I was in New York over the weekend and actually traveling in the lead up to Donald Trump's rally at Madison Square Garden. Certainly made for an